morning, good morning. You are live with us here at IG with myself and Rich.
A very happy Friday to you all. So, coming in the train this morning, I thought, God, it might be a bit of a quiet Friday morning. Oh no. The Asian markets certainly had something else in order for us. So we've got a lot coming up.
And also, we're going to tell you what the trades are like at the UK Open. China definitely hasn't stopped its bazooka action. More on that, then confirm and send, and also many other things to cover in the show.
We've got an interesting market measures this morning. So it continues our sort of beginner's guide to options this week. And this morning is about duration and volatility. So when in the calendar is exactly the best time to sell options?
Do we get a calendar for this? Because it would be quite handy to have a sort of like...
The big flashing green light is said, okay, now move to your next month's expiry.
Yeah, totally.
I bet they do in Tasty, so I think we can get that one on board.
Speaking of volatility, I love volatility, and boy, did we get tons of that continuing in the overnight session. I was messaging.
Were you trading in the power hour last night, Ange?
I was, and also in the lead up to it. But I also had this feeling in my gut that China wasn't quite finished. But more about that in a second. This morning, I just realized.
Oh.
My first train was delayed, which delayed the second train. Managed to get the second train, and then ran across London Bridge.
Oh, this is not stress you need on a Friday morning.
I did feel as if, like, you know, I was running, but like Audi, but with weights on my legs. I felt a bit like a giant hippo.
He's gonna love that coming in this morning.
I'm hoping you're listening. He made me say it. But it's not for my constitution. I know you run, don't you? It's just not. I feel like my heart is going to explode. I feel like my joints are all saying, "What the hell are you doing? Go back to cycling." Everything just felt. I don't know. Maybe I'm not just not.
And
a runner.
you still got in with many 20 minutes before we came on. So
yeah, but you didn't see me coughing blood outside.
Oh, really? And here was me getting us a nice chocolate croissant to share before we went on air as well. So we've got that to look forward to the break. Now we are going to go, instead of talking about my Deliveroo last night, thanks to the guys downstairs, a reminder, Deliveroo were in the office last night. They brought me dinner, which was,
nice.
was great from Wagamama.
What did you have?
It was the pad thai.
Oh.
Yeah, they do a great chicken and prawn pad thai. So I only ever use Deliveroo when they have the £7 off September.
Nice.
So this isn't an advert for next door.
I love it.
Way too expensive.
Money supermarket, Rich.
But let's get straight into our overnight action. They've only gone and done it again. China, for the 4th day running, have come out with further stimulus measures. So we're seeing iron ore up another 1.5%. Copper's not moving, which is interesting. But let's dig into here what exactly they've done. Producer Fred came running into across to my desk as soon as I got in this morning and said, look, they've sold 2 trillion renminbi of sovereign bonds. They've cut the reserve ratio yet again. They've cut the 7-day repo rate again. So I do have a graph on some of those measures. Let's see where that is. We got it up here. So there we go. There's the moves. As you can see, even with the stimulus provided on Tuesday, Wednesday, Thursday, Friday, they've hit us with that 7-day reverse repo rate, which is now down, certainly the lowest that I can remember. I can't remember a 1.5% before. So just absolutely incredible. Of course, that's seen the Hang Seng 50 up yet again.
Which I've got on my platform here, the IG platform. Excellent. If you whack this up, look at that move. I'm telling you, I'm going to widen that out a bit so you can see as well, you know, the climb up. And you'll see a similar action there as well. If you look at the CSI as well, let's just bang that up for you.
This is so painful. So on the week, The CSI, the wider index, the 300, up 13.4% in 1 week. We've got the property sector up 28%.
I know. And this is the thing, guys. If you're watching China-related stocks, like myself and Rich, boy, is it exciting, because I'm adding positions to mining stocks. I'm adding positions to the luxury stocks, which are very, very much a China play.
Which luxury ones have you gone for?
Well, at the moment, it's very un-Ange, this. Across the board. Because... Actually, Swatch too, because the Chinese love bling, right? They love a bit of... I think this would not cut the mustard.
Yeah, you wouldn't be welcome back.
Yeah, but normally I would pick. But I think the China story is just the beginning. And I tell you for why. Don't look so much at what they're doing. Look at the mood music. Look at what Li Qiang is saying. Look at what Xi Jinping is saying. Look at what the Politburo are saying. And the mood music has clearly changed. It's not a, we're just going to have a few moves and then back off. This is a huge start of a stimulus era for China, because the mood music has changed for, we'll take small baby steps to, we're going to do it again and again and whatever it takes.
This isn't just a bazooka. This is a full-on arsenal of weaponry that has come out day after day after day. I thought we were done after day one, you know, and so you've seen, I think it was yesterday when they started to be talk about helping the banks yesterday with that big injection of 140 billion US dollars, then that's why we saw all the huge moves in the luxury names. Even the autos came to the party yesterday. It took them a while to get going, and a while to warm up their engines, but even the German autos really started to move yesterday. And then, of course, stocks like Prudential and Standard Chartered as well, which have got such importance over in Asian markets. So, and then, of course, the good old mining stocks. Yeah,
I mean, the mining stocks, I'm adding positions to that as well, because, you know, all this is just going to stimulate China's economy, and it's going to need to build, and it's going to, all those projects that were on ice, right?
That's it.
Suddenly, it's all systems go. And so I'm adding positions to split out.
That's right. The really interesting differentiation this morning, and this is going to be key to our London market open 23 minutes. Copper is down. Right, so it has been lower, it's been down 1%, but copper's actually down, whereas iron ore is up a further 2.8%. I would imagine somewhere in the London we see all the stocks marked up in because the stocks, right? But there should be outperformance from Reals this morning. There should be outperformance from BHP. Anglo-American have also got iron ore, whereas something like Antofagasta has zero exposure to iron ore. So if all the stocks get marked up, then that's wrong. That should not be happening. Unless there's an upgrade, downgrade out there, we'll keep an eye on that. But really interesting, further China stimulus this morning. It's not a story in Asia. So, Mr. Shiba, that's resulted in a big move in currency. So Japanese yen is actually down 1% overnight. So just remember, weakness in the Japanese yen means that US dollar yen goes higher. So we've had a 1% move higher, down trading over 146. If we can have a look at that.
Exactly. I knew it's today, but do we know what time?
Just before 4 o'clock. Let that move. Is that 7 our time?
1 minute. Have a look. Let's look at the.
I see. Sorry, that's going out late. No, just overnight. So yeah, 2-3 minutes.
2-3 minutes.
Well, there you go. There's a live move for you. So the game is actually moving as we speak, as we here. Then we have that is for we're running 146 just as we were coming to the studio, and I'm guessing we've had some news on the elections list. We'll come back to that very shortly. We'll see if we can find out the result of the
What's happening with the volume? Is it spiking as well?
I bet it is.
Oh my goodness.
Now, elsewhere, what are we going
well, it's saying Ishiba is set to become Japan's next prime minister. Yes, they've chosen.
Oh, right.
As a next prime minister.
So you are seeing the yen moving, obviously strength. That means stocks, right, were up 2.5% as the currency was weakening, and that's because they're so reliant on their exporters. The exports become cheaper to the rest of the world as the currency weakens. So you have that huge move up in Japanese equities. Let's get a look at how the Japanese market is down 3%. So
keep
look at this.
talking, Rich. I'm putting on a trade.
This is really moving as we speak. Look at that. I'm going to go to the 1 minute here.
Scalping going on.
That is Japanese equities, which of course have closed, but we get the JIP down, as we call it in old Bloomberg terms.
The JIP down.
So this is live action going on as we speak. The new Prime Minister is Ishiba, and Ishiba we know to be the former Defence Minister, was running against Takaichi, who was the Economic Security Minister. So we'll come back to that when we get more on it. So there's so much to go through. Last night we had Costco results after hours, and they missed the revenue figures.
They did.
So remember the stock on that almighty valuation that Chris Beauchamp, as I like to call him, or Chris Beecham, was talking about.
Are you doing that just to annoy him?
And he published research earlier this week looking at, between him and Axel, looking at how expensive that Costco stock was. So you don't want to miss numbers when you're that expensive. So Costco down 1% after hours. We'll see how that trades later on this afternoon.
Pop quiz. Name me one of the products that has the biggest margin for Costco in the US, not the UK, because I haven't actually.
Must be one of the big ticket items, I would imagine. So like a television? No?
Keep going.
Toilet rolls.
Our French producer's saying tea. Who else? Any other toilet rolls? No, come on, I'll give you 2 more guesses. Big sushi trays. I actually haven't been to one in the UK. I mean, you see a lot of them in the US and the burbs and everything, but...
I'm just wondering if it's one of the areas. No, I'm not looking at the answer. I'm looking to see if it's one of the areas where they miss numbers. So do go on.
It is their Costco sausage, which apparently is really famous. But I've never been able to, well, I've not actually been able to find one or see one here to go to it. But in the US...
Is that sausages or hostages?
Hostages. Sausages.
Right, okay.
Yes.
You know, you got to watch. It's very, very easy to mix up the two.
Hostages. They come cheap. Wholesale hostages, sausages, and it's like really, really a thing. I didn't know this was a thing, but Cam swears by the cost.
Is this like when you go into IKEA and you get the little hot
Yes, yes. And for those of you watching from Australia, I know we have some viewers even all the way from Melbourne because you've tweeted me. It's like the Fossey Sizzler, or that's their version of B&Q.
Right.
So you rock up in your big car, in your big van, you're about to go and get some plasterboard or cement or whatever, and then you first head to that little shack that gives you the sausages.
Sausage,
yeah. And then you put your own mustard and onions and everything. Apparently it's really good.
Well, I mean, definitely. When the only thing I can think of is IKEA compared with that, and I definitely head straight for those hot dogs. So yeah, if we want to look at the article, is it in the sausages that have caused those lower revenues? Don't think so. It is ultra low prices driving demand for groceries and kitchen staples. The consumer spending on furniture, home, sporting goods, Nike, has been choppy, hurting sales at Costco's warehouses. So if we just want to take a look at that article there, we got an interesting, the CFO saying there's definitely some signs that the consumer is being very choiceful. Now that's the first time I've heard that word used to describe the consumer.
Is that a real word, people?
Choiceful. Isn't that interesting that the CFO is making up new words? Like we had uninversion to talk about the yield curve.
Not a real word. That I don't think I've ever seen that in the Oxford Dictionary. Have you?
I don't think so. Go on, have a check to see if our CFO is pulling out words.
Oxford Dictionary.
So
choiceful.
The important thing being is they're being very choiceful in how they're spending their dollars. So that is going to affect the whole.
How is this possible? The earliest known use of the word choiceful is back in the. Is this real? 1500. Really? OED's entry for this word. Not sure. It says here the late 1500s.
Right. Okay. Good old English.
Oh, thanks to Edmund Spenser, poet and administrator in Ireland. Had to be an Irish person.
To be sure, you got to be choiceful over there.
You got to be choiceful over there.
Right. The analyst comment on Costco was that shoppers have not run out of steam. They're just redistributing their spend between various physical and online retailers. Reminder: this is my trade on at the moment. Long Adidas, long Hoka, short Nike, because I do think, as the analyst says, that shoppers are redistributing their spend away from Nike and they're buying the Hokas and Adidas and On running.
I can tell you though that Costco, if you know where to look, in the US, is the right place to pick up those brands because the discounts on off-season items is 70 to 80%.
Oof. Wow.
Yeah.
That's incredible. So is that where they dump their stock?
Yeah. And I picked up a pair of trainers, and I thought this is too good to just pass, even though it's like not my thing, right? But I was like,
what brand?
I think it was.
As long as it's not Nike, I don't mind.
It's not Nike. It was like a weird. Like I really needed. I went to Chicago with barely anything. Like threw everything to a sky cab, and had to steal a tastylive T-shirt on the last day, which Frank knows about because I had nothing clean left to wear, right? So I bought a pair of Skechers.
Ah, right. Okay.
For guess how much in pounds after conversion?
I'm thinking along the lines of 42.
30.
Wow, that's
30
incredible.
quid. You could not buy a round of coffees for 30 quid here, right? And I got a pair of shoes.
Speaking of which. Branded mug as well.
At Costco, you can find this on our client sentiment as well. If you go to the chart, just toggle to the right, and past signals you get client sentiment, and it tells you, how many on the IG universe, how many long positions, how many short. So you can tell that there's a real. It's like almost 50-50, isn't it? Look,
yeah.
52% have long positions, 48% have short positions.
Okay, so it's very even.
It's very even, yeah.
Interesting. Right. Why are Treasury yields rising with the Fed slashing interest rates? This is one question from CNBC this morning, and I find this really interesting. It came out yesterday in the afternoon. Of course, Jerome Powell was speaking. Not too much new came out there. It didn't really move markets. Despite the Fed approving a 0.5 percentage point reduction in its baseline short-term borrowing rates, and Treasury yields have been moving higher. Why are they moving higher? Right? We should be seeing yields come lower. But because of the Fed's shift in focus from inflation to the labour market, some people now think that they're taking their eye off inflation a little bit too much. We've got potential for inflation to run higher in the medium term. Okay, the the pressure's still on it to drop. So, you know, you're seeing 3-month yields, 6-month yields reflect where they should be. However, if you look 2-year, 5-year, 10-year, then those really haven't moved. So once we're past the election, do we see more talk of even the official target moving from 2% inflation to 2.5%? You know, that would really hurt bonds, because if you've got less, you know, stable inflation expectations, then you start to concern about lending your money to the government. That has moved crypto. So crypto, we're seeing this big move up from the 60,000 level to 65,000 overnight. I managed to pick some up last night at 64,000. And with all this stimulus being thrown in by China, with continued talk of further 50 basis point cut in the US, then Bitcoin is really finding a friend, because we continually devalue the fiat currency. That is when crypto with that fixed supply really becomes your friend. And a reminder, warning, crypto.
All you kids at home, go back to your breakfast, go back to your cereals, because the party line is crypto here at IG at the moment, still for our premium clients. And of course, if you'd like to buy any related crypto product, please just, you know, tap your friendly client manager and have a chat. So this is only for our premium professional clients.
But for those adult premium professional clients out there, let's take a look at that
Yay!
chart. What a chart. That is a beautiful thing. That's a 10-minute chart. So we're covering about 2 weeks there. And we're really starting to look, you know, is that a breakout? Is that ready for another breakout? Is it going to be one of these weekends where you finally get the move that all the crypto kids have been waiting for? Of course, it's not just in Bitcoin we're seeing it in the others as well, that you can find on that IG app if you look hard enough, if you're allowed to. But I did manage to pick up some, only 0.3 contracts yesterday at the 64,000 level, so that's been a nice little $300 profit overnight.
Nice. And also, I'm kind of grinning away, because since you were chatting away about Japan's new Prime Minister, I put in a quick, short scalp, and I've just closed out. Since you spoke, £25. Not bad since you last spoke, right?
On the currency, is it?
Yeah.
Oh, well done. Lunge on Ange. The guys in the gallery, we've got Terence and Caleb in this morning. They are very much looking forward to a treat on lunch.
This is why you need a limit and a stop, because whilst he was chatting away and talking at me, it did its own it did its own thing. It did its own thing.
Great, let's go to a break. Then we'll come back for that opening bell.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into 3 key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Forex. At its core, the simple concept of converting one currency to another. But the jargon can be confusing until you get to know it. First, let's look at the instruments that you can trade. Forex is traded in currency pairs, because effectively you're buying one currency and selling another. The currencies themselves are represented by 3-letter codes: USD for the dollar, EUR for the euro, JPY for the yen, and so on. The currency on the left is known as the base or primary currency. On the right, the quote or counter currency. Popular pairs such as the pound versus the dollar are known as major pairs. Those traded less frequently are called minor pairs. They include currencies like the Singapore dollar or the South African rand. Pairs containing emerging currency, such as the Mexican peso or the Polish zloty, are called exotic pairs. Traders also use several slang terms in Forex. For example, cable means the pound versus the US dollar. It refers to the original transatlantic cable between London and New York. You may hear names like loonie for the Canadian dollar, which has a picture of a loon bird on the coin. Then there's the Aussie, the Kiwi, and the greenback. The movement for Forex prices also has its own term. A one-point movement is called a pip. In most major pairs, this refers to the fourth digit, to the right of the decimal place. So, if the euro-dollar price changes from this to this, that's a one-pip change. One important exception is when the yen is the quote or counter currency. Take the pound against the yen. Here, the second digit is the one to watch. Any extra decimal places shown in the price are known as fractional pips or pipettes. Each one pip movement is worth a tiny amount. So, Forex is normally traded in standardized quantities called lots. A standard lot is 100,000 units of currency. Small investors don't often have access to such large amounts of money. So, many Forex providers allow you to trade using leverage. This is where you can open a rather large market position with a relatively small deposit, known as a margin. Your profit and loss are based on the full position, however, and your gains and losses could far exceed this amount. So, when trading on leverage, it's important to keep an eye on the downside risk. Those are a few of the basic terms you're likely to come across when trading Forex. There are many more to learn, but understanding these should give you a good start on the road to becoming a confident Forex trader.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome back to the opening bell. So, thank you very much. Mr. Scott Byrne, my ex-colleague at Credit Suisse, has messaged me in to give me the reason why we're seeing strength in the Japanese yen there, and that is because new Prime Minister Ishiba did talk about the support for raising interest rates further last month. So last month did say that we'd be looking to raise interest rates further, hence the strength in the Japanese yen, hence the weakness in Japanese equities. Thank you very much, Scotty.
And also, those of you that were watching the last 5 minutes, it broke on air, didn't it?
Broke on air.
We're talking about it, and then Rich was like looking at the chart going,
That's the wrong direction. I don't understand what that move is.
And then I was like, just keep talking, because I placed a trade, and in 5 minutes it closed out, which is great, 25 quid there. Thank you very much, Rich. Just a very quick scalp there whilst it was all breaking for us. But let's have a look at where.
60 seconds. So just to note, we've got British Land is to replace Dark Trace in the FTSE 100. That is from Pete Ward's morning message. Elsewhere, we've got news that LVMH investing in Moncler through a deal with the CEO of Moncler, Remo Ruffini.
And also, of course, that China trend still continuing very strongly, as you know, because we had more stimulus announced overnight. And as we discussed, I mean, my gut feel, Rich, rightly or wrongly, is that this is the beginning of a huge arsenal, huge wave of more stimulus to come through.
Guys, do you want to just flick to the opening prices there? Sorry, as Angeline's.
Yeah, and as you can see, it's still early in the morning, but I'll bet you that all the luxury stocks relating to China, the Kerings, the Hermes, the LVMH, the Richemonts, the Burberrys, Swatch even, right?
So you're exactly right. So Kering up 3%, LVMH up a further. Feels like this has been, you know, are we on Groundhog Day? Am I still dreaming? Prudential up 3% every morning.
I know.
Miners, luxuries and autos up this week as China continue to put in their bazooka stimulus. It's a 4-day bazooka. So some big moves across the board there. Let's see who's been forgotten about. There is no interest in Rolls-Royce this morning, down 1%. Barclays down 1%. And in Europe, we're seeing Schneider down 1%, but not too much else. It's all about the winners. It's all about the man from the Pru.
Yeah, the man
up
from the
a further 3%, above £7. A reminder that is now a 12% move on the week.
It's doing really well this week.
Yeah, that's a very strong week for the Pru. Of course, they've been waiting for it for so long. If you look at the graph of the man from the Pru.
Now, also knocking up Swatch, because you heard me talk about this the other day. Swatch up 1.8%. Look at that chart. It's a beauty. Look at that. And I have to say, I don't normally buy Swatch because I like being quite picky about my luxury stocks. But hey! We're kind of like across the board here, people. So I've added Swatch, I've added, you know, all the luxury names because I think that we're kind of like going to see weeks of this trickle stimulus from China, if not months, really. So it's coming a bit back off now. This is the minute chart, which I sort of have a look at just to see where the momentum's going. I see you've got a nice trend channel there on Prudential.
If you have a look at the Pru there, so I was following this this trend channel lower when I started considering buying them, and I was considering buying them from about the £7.30 level, and I thought this was the breakout. Okay, I thought that was it, and then it came back to the line. And it's now using that as a support, it looks to me. And then we've really, so if we take the channel further higher, then, you know, is that also a breakout of recent? Certainly it looks like China helping the Pru there. So we're now above £7.
I like that chart because if you lower your trend channel, just lower it back to where it was.
Your expert.
No, from the top line, lower it to where it was earlier on, to sort of the midway point.
It's like down here?
Down a bit further, down. There you go, down a bit further. There we are. That's a really nice chart for... Have you heard of inverse polarity?
No, I haven't, but I do like the sound of it.
Inverse polarity is when you have lots and lots of... you see the lines that bump up against the top trend line, and you're seeing a lot of resistance there, and once it breaks through, that becomes your support line.
The new support,
yes,
right.
And that is the principle of inverse polarity.
And I think this is really the move this week is the proof in the pudding that it's tried. Is that your power of 3? Look at that. It's tried the support.
Yeah.
1, 2, 3 times, and then up we go with that stimulus. I'm almost talking myself into buying some.
I'm also looking at this
because I owned it earlier in the week and I let it go at 660.
Oh, well,
I made a little bit on it, but I sold out at 660. But that looks like
you gotta get back on the saddle. This is the thing, that if you fall off the bike, you need to brush yourself off. Get back.
And this is, I'm sure all our viewers are going through the same kind of psychology this morning, right? You've been looking at Louis Vuitton all the way down and you haven't bought it. Or Burberry, like yourself.
Yes.
You've bought it and you've been stopped out. It takes such a hard psychological state to come in on a Friday and you haven't bought it on a Wednesday, you haven't bought it on Thursday, and now you jump in.
I sold it last week, and I sold it last week as well.
But for everybody that's looked at the autos, you know, and you've had a chance to buy Mercedes yesterday, you know, 3% lower. You've had a chance to get into, the Pru. You know, there's numerous names. That real psychology.
There's Mercedes.
So is that
That's Mercedes.
What chart's that?
That's Mercedes, the daily chart.
The daily chart. So a week ago, this was awful. This was down 6% on cutting its revenues.
There we are.
And you see that big red candle, but it's made it all back. So it's almost back to where we were on expectations that the China stimulus will help sales of Mercedes in China. It's tricky, isn't it?
Yeah, and it depends really on your conviction. And this is why, you know, we talk a lot about, you know, having a theory, whether it's your trade is right or wrong. Your boss said, as long as it can explain the theory behind it. And if you have a strong case, if you have a strong reason behind why you're buying or shorting the stock, then sometimes I think you need to kind of like believe in yourself and stay for a bit longer.
Yeah. The famous Danny Kaye, Credit Suisse, and laterally Macquarie, was always thought process. Now, if I bought Prudential this morning, you know, more on a medium term, right, the thought process is correct, because this China stimulus is really going potentially to assist the business across there. However, it's up so much on the week that jumping in now at £7 on a Friday, you know, I don't.
What do you do?
I really struggle to do.
What do you tend to do on a Friday? Do you do more housekeeping than usual, more tidying up than usual?
No, my housekeeping's a Saturday morning.
Ah, interesting.
in my portfolio.
I just can't. I thought you would have like everything, you know, spick and span, go off for a jog, and then the cleaner comes on
The reason for being so spick and span this morning is because I'm being taken to the cricket this afternoon.
Nice.
So I've got my cricket whites on. Thank you, Pete Ward. We had a bit of a dropout late on in from one of the clients. So Pete gave me the last minute heads up. And as a client of IG, who pops into the studio every morning and has a little chat about stocks with yourself, then I'm very happy to be taken to the
good man, Wardy. Wardy's really good like that. So let's have a look at elsewhere to see what else is moving. Looking at France, lots of obvious names at the top, your Kering, your LVs, your ST Microelectronics, your Hermes. But as we said, even the autos are having a good day again. They're kind of like, you know, warmed up their engines. Renault is up there, Stellantis as well. And also Pernod is up 1%. I guess Pernod is also considered sort of like, in a way, a luxury drinks maker. I don't know whether...
Yeah, definitely. Remind me what brands they have within Pernod Ricard. There is, because it's not one that you really, you don't.
Absolute.
Thank you.
Malibu rum.
Producer Fred, the expert on.
Is he a vodka man?
Vodka. I love Absolute because it's always at that perfect price point. It's a beautiful bottle, so it looks premium. It looks like one of your Grey Goose or your Belvedere. But Absolute, if you're buying a bottle for a house party, then you know it's usually on the old club card deals as well. 25 quid for a nice bottle of vodka.
Did you know you know? Do you know it was you and your? I love this. You need to write a richest, you know.
Club card, the deals of the week. Richest
deals, right? When to get that Wagamama
now,
version.
Talking about deals of the week, do we have an Ange play of the day?
We do. We do have a play of the day.
So the play of the day.
So this is the play of the day, right? And I'm going to show you how I'm going to put it on. That didn't sound good again. So what I'm going to do is, first of all, I'm going to check. Don't know whether if you want to see my screen, but I'm going to check if, and you know, you can do this at home. You don't really need anything special. So I'm just going to type Boeing. I'm just going to type strike, because today is when Boeing meets the union in a bid to end a crippling 2-week strike Now, many of you have heard myself and Frank talk about this. Many of you have heard myself and Rich talk about this. This has been ongoing, hasn't it? And it's just been ongoing. And actually, the money that is being asked for, it's quite a big, pay rise. And I'm sure there's every reason for them to ask for it. But the International Association of Machinists and Aerospace Workers, they're asking for a 40% pay rise.
Right. And I think the last offer was only 30, wasn't it?
Exactly. And correct, that 30% pay rise over 4 years and a performance-related bonus was basically Boeing's best and final offer. That was it.
Right.
Right? So I think
it's the problem when you say something is best and final, you can't go back on that, can you?
Yeah, you can't go back on that. So I already shorted Boeing last week, and I took money off the table. And in fact, if I can show you my history list, Boeing, all sessions, I'm clipping off small bits as we go along, not big positions, small positions. And I think there's going to be a bit of a bump again today, right?
Okay. A bump in the offer or a bump in the price?
As in a bump in the price. It's going to, we're not going to see, they already said best and final offer. Unless some sheer miracle happens, if,
And just check, by bump, you mean lower?
Yes.
Okay, good.
So I'm going to go sell. I'm just going to, chip away at this
that
thing.
won't be, yeah.
It's not open yet, but you can see how I'm setting up this, right?
Got you.
For
Okay.
a bit later.
I like it. Play of the day.
Play of the day. The
Now,
thing to remember is that although we're not in session yet, it is key to not wait till 9 a.m., right? You don't want to be like
to come up with your play of the day, that's right.
riddled with emotion. You want to do this in a really calm and mechanical way. And so I like setting it up. I mean, if a notebook's great for you, post-it note, whatever works for you, just scribble down the level that you are hoping to get to. And then when that 9 o'clock comes, you can look at the first indications of the volume. By all means, if you want to, sometimes I'll just put it onto a minute to see where this thing is heading, right? And then but I'm going to be shorting this because if history doesn't repeat itself, but boy does it rhyme.
Yes, it certainly does.
Then we're likely to get news come through at around 4 p.m. our time.
Now, you mentioned 9 a.m. there. Just before 9 a.m., we look at our trade expectations. So we've had a viewer write in this morning and ask, can you talk a little bit about Vodafone? The reason behind that is because for the last 6 months, I have had Vodafone as my number one pick. This is the one, it's an 18-month trade that I am looking at. Well, it's probably now only 14 months because I've been speaking about it for so long. There's not too much going on this morning. Vodafone trading just above 75 pence. It's down 30 basis points, of course. No exposure to China, no exposure to all and everything that is sexy and good about the markets in the last few days, luxury goods, luxury autos. However, this is my real number one, my king position if we're thinking on the chessboard. So before 9 a.m. this morning, trade expectations around about 7:45. I'm going to go through my thesis on Vodafone, why I think it's going to be the number one performer in the FTSE in the next 12 months. So join us 8:45 and I'll be doing a deep dive into Vodafone strategy and I'm calling it a doer upper. What do you think of as a doer upper, Ange? Is that one of your properties?
I love doer uppers. Although I currently am so committed to this early morning show that I have had to set that.
It's not early anymore. It's 8:15. It's mid-morning already for us.
Yeah, but for me, who's like, I have an Asian stomach, so I tend to come alive at 11 p.m. I'm that person that can tell you where the 24-hour joints are and where to get a triple vodka shot if needed at 2 a.m. Right? I'm not that person.
As long as it's absolute.
Did you know that Absolute tried to target accountants at one point?
Right, and in what way?
They had like a huge campaign. Did you not know about this?
No.
Yeah. Let me see if I can find the...
Win the accountants over. That's always a good way.
They used to have and there was a Sweden nothing to hide advert push as well, which I'm not going to put up in case compliance come after us, but you can imagine what images you see if it says nothing to hide. But there was a lot of, I think it was in the 80s where, you know, I loved being an accountant until I discovered absolute vodka.
Absolutely.
Yeah. Not going to show you the Swedish farm ones because that's just a bit too edgy for all our viewers, adult or not.
Especially
adult,
at this time in the morning.
Especially this time in the morning. But also, I told you we had a winner for our quiz yesterday.
Right. Yeah, to go on.
So we're going to get that sent out to you, a tasty lapel pin. Today, there is a new quiz question. Are you guys...
Friday quiz.
Do we have time? Do we have time? 8:15?
Oh,
do we
yes,
have
we
time?
certainly do.
Okay, great. So, the question, dear friends, is, and this is related to trading. When the first... Are you guys listening in there? There's a lot of laughter and hilarity. You ready? Right, Terence is ready. Caleb's ready. Fred's ready. Okay, because there's a prize in this. People, there's a prize in this. When the first dice were created and used, now we know for divination, not gambling, initially used for divination.
In Egypt.
Or the Indus Valley. Those dots, right, that symbolize the numbers, what do you think they were called? So, no cheating, people, no cheating back home, no Googling, no, right? And for anyone that uses dice in any sort of game or is interested in that sort of history, it will come easily. And it's a term that every trader uses. Every trader.
Oh, that's a good clue. Right. Okay.
So
interesting.
have a think, and we'll ask this question again later.
I told my Egyptian neighbour this stat last night, so I hope your stats are true.
Wow.
Because he was very impressed. He didn't know that it was from bones.
Look
that
it
the
up.
first dice came from.
Most of the first human, you know, like games and toys are all made out of, you know, bones because rocks. It's quite hard to carve a rock.
Yeah.
Right.
Yeah, that was my guess. Oof. Right, going back to, we got the FTSE, biggest movers on the FTSE. Let's check that again. Smith & Nephew popping its head up there, up 1.3%. Yeah, it's outside. It's interesting, those miners are kind of falling away now. Well, we've got BHP still up 1.5%. But where's Antofagasta on my list? That has disappeared, and that's because, of course, as we said, pre-market, the copper price has not moved with this latest round of stimulus. So Antofagasta only up 25 basis points. And over in Europe, we've got Ange's favourite Kering up 4%, LVMH up 3%, Porsche joining the party. Air France has had quite an incredible week. Let's look at the chart of Air France. That's one that got the double upgrade, remember, on, it's so long ago now, was that Wednesday?
Yeah, I think it was
week,
Wednesday.
So the double upgrade, and that is starting to look interesting. Look at that. That's the
That's
1
kind
hour.
of a nice chart,
So,
actually.
yeah,
Is that the daily now?
And that's kind of, I feel like that's been sneaking up on everybody.
Yeah.
Because I haven't really paid attention to Air France for a while. Let's see if IAG is getting the same kind of reception. Is this just something on the airlines, or is this Air France specific? There it is. That's not great, is it? So let's go to a 1 hour. Oh my goodness, look at that chart. That is, I'm having some of that. That is one of the, that's ready to go, isn't it?
Yeah, it looks 1, 2, yeah,
Wow.
3 touches. And check your volume. Just check your...
What stop should I put there if it was going to be a false breakout? Where would you set your stops there, Ange?
Well, I would probably put it just under, you see just under that line, the first drop off there, and then if it breaks past, go a bit further up, there we go. And if
here?
yes,
Okay,
a
so
bit
a really
lower,
tight stop.
a tight stop. If it breaks past that, then you can go in again and then put another tight stop at the next, resistance point of.
Right, so I'm going to put my stop threepence away, and I'm going to put my this where is that, 215. I'm going to try and make sixpence on this. I'm going for a limit 6 pence away, which takes me up to 215, and I'm putting my stop 3 pence away. So that's the reason I'm doing that, of course. Let's see if we can zoom in on that a little bit. The reason I'm doing that is because I like to have my potential profit, double my potential loss. So I'm 2 to 1 exactly.
Do you always follow the same risk-reward ratio?
I don't. This is very much because I'm having such a tight stop there, because if it's a false breakout, that's not going to help. But you know, IAG's been one I've been looking at for a while. Love British Airways, and let's go for that before it runs away from me. So there we go, 12,000 shares at the 209.70 level. Excellent. Right, I think it's about time for some Q&A, isn't it?
Yeah, this is the best bit.
Should we go to confirm and send?
Tons of questions. Welcome back. Welcome back. This is Confirm and Send, one of our favourite segments on this show.
Now, what do we have this morning? What have you got for us Friday, producer Fred? Why I sell a call against my long position? Doesn't that hurt my upside?
Did we talk about this yesterday? Or did we talk about it the day before? I can't remember. But
was on one of your positions you were looking to sell call?
Yeah, but also sort of, you know, how do I cover myself? Because obviously I've got this right move position.
Ah, yes, that's right. We were talking about it in regards to that.
Yeah, and the trading desks have been taking the piss out of my right move position. Wardy's like, it's not going to happen, Ange. You need more bidders. You need more than just Rupert.
Is that you, Pete Ward? I'm not. Is he the voice to listen to on right move? He has had a few properties right enough.
He certainly can stir. You know, he can really.
Yeah, but I would think more of, you know, a call option. Let's you know, go over to the US. So let's look at the old tastytrade platform, and something like, well, I don't own Nike. What do you have any positions in the US at the moment?
Yes.
Actually, sorry, Vodafone. I'll stick with Vodafone, Angela. Apologies for
that's all right.
setting you up there.
No.
So we're going to go to VODs. Now, I own Vodafone in my ISA. I own Vodafone in my SIP. As I said, it's my number one position. Right now, this is the Vodafone ADR. So I'm looking at, you know, it's dollar rather than pence. It's a multiple of 10. So it trades at the $10 level, right? So Vodafone, $10 in ADRs. Therefore, what's my upside? My upside prediction is Vodafone to move around about 20% in the coming 6 to 9 months. Now, I would be happy with that. Right, I'd be happy with a 20% return. So therefore, I look at the call options around about that 6. Well, let's look 5 months out, and I'll look at the level of $12. So that's 20% higher than where the stock's currently trading, and I can receive 21 cents. So that's 2%. Now, if I'm looking to make 20%, and I'll be very happy to sell it up 20%, then why not take in an additional 2% of call premium? A reminder, if you sell a call against an underlying stock position in the same size, that is what we call a covered call. And it's covered because you're not going short if the stock goes above it. Right? You've got that stock position and you benefit from the stock position all the way up, and then you're selling your stock position here, which you're receiving premium for. Therefore, you're actually selling it 2% higher. So you'd be selling it at the 12.20 level.
The logical question would be, do you do covered calls for every single position you have.
Do you remember when I was talking about the chessboard, right? Then you've got the different movements of the chess pieces, right? Now the bishop, for example, moves in a very, slow, measured way of a diagonal move to the right. That's what I think Vodafone is. Vodafone's a small mover over 6 months. However, the castle or the rook is going straight up. There's no point in selling a covered call on something that you think is going to go straight up in a short period of time.
Right, gotcha.
Because you're not benefiting from the time decay of the option. So that would be, let's say I thought there was a potential of a bid story. It happened in one of the US stocks that Google was, being rumored to look at. The name escapes me now, I'll remember, about 3 months ago. So you wouldn't sell a call over that because, you think there's a chance for a pump. So right move is not one that you would sell a call on.
I thought you were going to say, but right move, however, no, so you wouldn't have a covered call?
You wouldn't, because it's in a bid situation. And the potential bids would be in the Sunday press and on Monday, in time decay.
Got Vodafone, obviously you would, because this is your thing, right? And it's a long-term play.
That's exactly right. I actually, let me just get this up. So I have. This is a different account for me. So this is my options account. So this is my options account, and I had this before the trade came on. The shift on my options on tastylive. However, we do have still some of my exit positions. I am short a call for 5,650 on the S&P US 500. I'm short a call 6,050 level for March. Now you can see using money on those. That's because those in my main are covered calls for ISA and my SIP.
Right.
Right. So my hedge, I don't want to sell the long positions in my hedge. I don't think that they necessarily go much higher. Right. I think maybe it won't go down that much. And it's in my pension, so it's long term. But I thought I'd taken an extra bit of premium. So you can see that I've sold the 6,050 calls for 50 ticks in £40 a point. Therefore, I'm looking to take in an extra dollars of premium. Which means that my pension, or I don't the pension doesn't go up. Make money by receiving an additional 2,000 in my trading account here. So yes, it's not something you're going to a stock you think will move higher in the short term, but if you think it's a very gradual mover, then a covered call.
Is there a reason why you chose March?
Yeah, so the first I could,
right, okay.
And that's a great question, because that's what we're going to look at in market measures. What's the right amount of time to look at duration on selling options?
Cool.
Excellent. Next question, please. Team in the gallery.
Are there any PA tools I can use on a newly floated stock? So the thing I would say is, with a newly floated stock, think about this logically. There is not any price movement, right? The whole point of technical analysis is so that you can actually decide mechanically, not emotionally, but mechanically, where...
Without emotion.
Exactly, without emotion, where this is going to go. And I personally do not like trading a TA on a stock that is newly traded, because you don't have these signals, right?
Like a newly floated IPO stock. There's no 6 month graph.
Yeah, and the thing as well is, and Rich, you probably give more color on this. Some of the people working on these IPOs, sometimes even they get it wrong.
Yeah, I've definitely been involved in that one.
But, you know.
May 2011, we IPO'd Glencore. and there was three of us. There's Credit Suisse, Citigroup, Morgan Stanley, and I was the mining trader. So it was my job to open the stock and then have an orderly trading session. So the IPO price was £5.30. It opened at £5.49. You know, as IPOs usually do, a little bit of a premium. However, that was the highest that it traded in, well, I'm not even sure if it's been back there. £5.49 Glencore, so currently £4.21. So yeah, 2011. Let's see if it ever got back there. This is what I need, the weekly chart here. Let's see if that goes. That's not even. We can go to the monthly because there it is. So yeah. Oh dear, even further back. 2011. Let's get that as far back as it goes, and that's to the IPO. Look at that, £5.30 it came, and over the subsequent weeks it dropped and it dropped and it dropped. We got to £4, right? So that was an IPO that, you know, was really, really tricky.
Yeah.
Where it was priced in the first place.
So, cut long story short, you know, a lot of these people that are working, they work very hard. But you know, I'm not, and no shade on them. But what I'm trying to say is, it's very difficult even for them to price an IPO. And a lot of the times, it's in the back of a fag packet. And you call up and you kind of say, "Hey, how's that going? How, you know, do you get a good feel?" And have you heard that expression where they go, "We can't price the book."
Oh, we can't fill the book.
Yeah.
Well, that's
And you just kind of like.
In fact, that's in industry, isn't it? There's a new series of industry coming out next week. This is BBC's show about the finance industry, banking, and in series 2, then they're really struggling to fill the book. That exact thing on an IPO.
But also, if you hear things like can't price, can't fill, can't price, can't fit, all that means is they're not. There's not enough demand, so they kind of don't know where it sits, right? So therefore, this tells you it's really difficult. Just showing you one story and one stock that I didn't want to touch, and I was really glad I didn't touch it. Aston Martin Lagonda.
Oh my God, I was involved in this IPO as well.
Do you remember the amount of...
I lost 200,000
height, the amount of pressure, and everyone was talking about this.
Oh.
You need to get in on it, and it's great. It's going to be one. You love cars, don't you? You love cars. Yes, I love cars. I love big engines, and I cannot lie. But this was this is one.
Andrew, just taking a sip of water there. You almost had me. A whole mouthful of water.
What do you know this?
You love big engines and they cannot lie.
I cannot lie. I love and I cannot lie. Right? I've been on, and I love cars, and I drive them and I test them at the Paris car shows, Frankfurt car shows. In fact, every time, you know, you have to sign the insurance.
Yeah, the waiver.
Yeah, the waiver, because if anything happens to you, if you die, crash in flames.
Which one of our IG clients on one of those days wrote off 2 cars.
There you go. So I had to sign all that, and all the analysts, because I'm a car analyst, had to stand in line, right? I love going to these car shows, although your legs feel like they're about to break after them. And so you tend to go with someone, like a Stig, right?
Because
like a Stig.
Yeah.
And every time I go on, they say, yeah, those are good, that's fine. And then when they get asked by the CEOs, like, has Angeline driven our car yet, right? Because it's not on the market for another week or so, but they're showcasing it there. And the person who's a Stig always says, yeah, I'm fine with the other, I'm quite worried about her.
Really?
I also do the Land Rover Discovery quarterly.
Yeah, they're fantastic.
That's great. Yeah. But look at that. Look at the Aston Martin Lagonda. You know, those people that price.
Still gives me chills.
If you had gone in and even looked, you know, at the very beginning, you would not have anticipated that huge fall.
So one of the analysts pushing this, and Arndt, I hope you don't mind me mentioning, Art Ellinghorst is the #1 German autos analyst out there. I used to work with him at Credit Suisse, and then he moved on to run Berenberg, and he's so good that Volkswagen bring him in to help them with their strategy, right? That's how good this guy is. But I shouldn't have listened to Arndt in a UK luxury car maker, because he was pushing this, and he was saying, okay, doesn't have as much upside as Mercedes based, potentially, but the stock came at £13, and he said he could see it trading 15 to 16, in fairly short term. What is it to get down? £3, £2, under £1 at one point? Yeah.
So cut the long story short, I mean, yes, you could if you wanted to, and some people prescribe to the count back line, but bear in mind it's very dangerous. If you want to read more about the count back line, you can just Google it, but you have to wait for at least 3 sessions before using any data. I would not personally go for it, but if that's your thing, then by all means look it up. But cut the long story short, the whole point of technical analysis is to trade according to what the signals are giving you. If there are not enough signals, then don't touch it.
Excellent. Right, we've got time for one more question, I think. Right, now the advantages of an interest rate differential strategy. So you guys out there that trade FX, what are the advantages of an interest rate differential strategy? This is the perfect question
and
this morning with Japanese
yeah.
yen movements, okay? So you need to look and you need to know your different interest rates across the world. So let's take a look at my favorite measure of this is CNBC bonds page, which is really useful, because you can see somewhere, such as the 10-year yield of Fed Treasuries, 3.77, right? So currently we're at 3.77 on the US 10-year. On the UK 10-year, we're at 3.97. On the German Bunds, we're at 2.1. And that gives us this clear difference between where expectations are. And okay, guys, we can come off that now, just so I can use my hands to explain with, as I love to do, a bit of Trump hand gestures. But we've got the US rates are now 3.77. The UK, the expectation of UK rates over the next 10 years is that you'll get slightly higher return for lending the government money, right? Let's remember what this is. You're receiving an interest rate. You're receiving the benefit to lend the government money in particular countries over the next 10 years. However, you're doing that in the local currency, right? So if I lend the money to the US government, I need to first buy dollars to give the money to them in return for that 10-year treasury, or I need to buy GBP. And I'm being paid the returns in that local currency. So when we've got the Japanese interest rates, 4-5% lower than the US, this is why we saw this huge move in the Japanese yen last year, over the last 12 months. Let me just get that yen. And this is, you hear people talk about this Japanese yen carry trade. And the carry trade was so important because it helped people finance risk, and it helped you get those risk on.
What I love about
sorry, Ange, go on.
What I love about the carry trade as well is that, obviously, as Rich rightly pointed out, there's a lot of mechanics behind trying to actually buy and sell and everything. But if you understand where central banks sit and if they are diverging quite with a big margin, take a look at the Aussie dollar versus the yen. So talking about the carry trade, if you look at 2002 to 2007, so where my cursor has started, I've got that dotted line there until 2007 where that peaks. You are basically borrowing money from a place where they're paying out less, you're paying out less interest to borrow.
Almost nothing.
Yeah, almost nothing. It's like play money, right? Monopoly money. And then you are using that to invest in a currency that's giving more interest. And that is the basic concept of a carry trade. And for those of you that like playing currency pairs like myself and Rich, you know, it's such a useful tool. Like now, you know, I'm bullish sterling, but I'm bearish US dollar. You know, there is a trade to be made there. And just understanding these concepts in your head allows you to be able to trade these differentials.
And this is what's so important about watching out for these central bank meetings, right? Listening to the press conferences. How are they talking about the next 6 months, the next 12 months of their view on their local economy, right? Is ECB talking about, right, we're not going to be cutting rates anymore, we want to see more data? At the same time as Jerome Powell is saying, we will do anything to help the labour market, right? That is suddenly a big shift in interest rate expectations. You know, Bank of England, right, only 25 basis point cuts more this year. It's really useful to know, as Anne said, the divergence in rate policy. Because that is, you know, remember that if you're, as Anne said, if you're selling yen, if you're borrowing in yen, and then you sell that yen to buy dollars, then you're paying 0.5%, but you're receiving 5%. So that 4.5% differential in the interest rates there, that allows you to really, you know, investing in commodities, investing in assets that are returning you an interest rate, a yield.
Well, that's all the time we have for this right now. But if you have any questions at all, do send it to us at ask@ig.com, which is right below Rich's face over there. There is no question too difficult or too weird. Just send them in.
Thanks.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. the more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more. Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team are part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Here we are, trade expectations. What we got, Rich?
Well, I have been watching Vodafone closely for
Not that we haven't noticed.
Yes. For this, I've been watching this for, you know, the past probably 6 to 9 months. It's been on my radar, and it has hurt me a couple of times. You know, I probably started buying it around that 80 pence first of all. So, you know, around about here. Mm-hmm. But Ange, what do you think of Vodafone? What's your impression? What's your, you know, if somebody mentions Vodafone, what's the first thing that comes to mind?
Just from I try not to let fundamentals get in the way. Mm-hmm. I try and kind of look at the chart first, and I would say that's a really strong upward trend channel.
But what about the company itself? Because all I heard to start with was, why on earth would we look at this? It's boring. It's, you know, because if you look at that, then that's suddenly not quite as interesting, is it?
No, it's not quite as interesting, but since the 2024, is that right? Where the bottom of your
That's
chart,
right.
2014?
Yeah, but more, you know, more the company itself. It's a boring, defensive util, isn't it?
You're speaking to someone that is a closet geek. I like boring. I like belt and braces, or like Frank said, boot and braces.
Boot and braces.
I think something completely different.
Uh-huh.
So
But
I think of
what
it
about
as
a stock that is an eternal disappointment? You know, look at that. You don't want to be in that, do you?
No, you don't want to be in that, and that looks like a car crash.
And so this has torched everybody's view. You know, so many fund managers tried to pick it up on the way down. They cut their dividend back in 2018. You know, if we actually go even further out,
It's like a Lib Dem stock.
then as in it peaked back in the election.
No, just
of,
that bit,
yeah,
that
with
bit
David
over
Cameron.
there, you know.
Yeah, I mean that
completely torched itself, you know.
That's
Generation of students that will never ever vote Lib Dems
Well,
ever
that's-
again,
which is-
ever, because they went and said,
Perfect.
"Oh, sorry, yeah, we did promise that no university rise in university fees," and then got into coalition. Sorry, that was a.
And this is multiple generations of fund managers, right,
Yes.
that will not touch
touch
this
it,
thing.
yes.
Right, there's no interest, and that is exactly why I call it a doer-upper, because you are the property queen.
Wow.
We know what it's
Not
like
at the moment.
when you walk into a property that is absolutely horrific.
It is,
right?
yes.
You've got things, wallpaper hanging off the wall. You've got showers from the 1970s. You know, just picture one of those buildings, houses, where the grass hasn't been cut for years. That was Vodafone 6 to 9 months ago. And that is when Margarita Delaval and Luka Mucic became CEO and CFO. And the company has become their doer-upper, right? That's become their opportunity to really turn things round. In a second, but this is exactly what they're doing. Was stuck in so the earnings growth just wasn't there, and the debt in 2019, the ex-management got them into this big. They went on the acquisition path, and as well as their forage into, of course, 5G, you have in this sort of spiral of higher debt, and with interest rates going up, nobody wanted to touch this.
Didn't they also like eat so much debt that they completely could cope with it at one point?
That's exactly it. So that was 2019, and that's been this sort of leg down from here, from £1.60. We had a dividend cut here back in 2018-19, and then subsequently the stock's fallen so much it got back up to a yield of 12.5%. Even a 12.5% yield on this stock was not attracting investors. What they needed was balance sheet. So look at to work. But of course, if the attractive thing and you're taking the dividend yield from that, then what do you replace it with? You use a large chunk of it, but then use the rest of it to a gigantic buy. This is one of the big buybacks that I've ever seen, especially in the London Stock Exchange. When I was press, I used to do the real buyback. And the way thing happened, just so the viewers understand exactly how buyback operates, is the ECM division in the bank, equity capital markets, are the ones. Each day you were sent a ticket to buy 200,000 euros. If thought was down, then your target is to beat VWAP. Now VWAP is related to that price. So if a stock goes is more attractive to the company. Shares that you're purchasing over the day, depending on what percentage of volume you are. in a stock do you think has an effect on price? Go up a straight line. When you're buying a stock, if you're going to 30% volume, you're going to affect the price, right? If you go in at 50%, you're going to have some effect. To really not affect a stock price, you need to be sort of less than 5% of volume. Vodafone trades about 100 million shares a day. This buyback is so big, it takes up 15% on average every single day. Goldman Sachs are doing buyback at the moment. And if you're at 50% of volume every single day, right, yeah.
Talking.
So, well, just yet. So if you go into like volume, then gradually, you know, the chances are everybody that's selling stock into you soaking up, right? The big deals disappear because you're continuing buying them. So they're selling stock. Eventually, as your technical analysis knows, the seller finishes and you have to take the stock higher to get more, right?
So what you're saying is there's a strong floor underpinning the stock.
There's a strong floor underpinning the stock, and that's where I do want to go back to the chart, guys. You know, this down in IG graph really. You know, who like that? I don't know. Really.
That's you, Rick. That's you when you're buying.
The buyback started in March, right? So at this level here, let's see if we can get around about this level. Now, the reason that I've put this channel, up moving channel in, is that's how I think this buyback, which is going to last up to 2 years of buying 15% of volume every single day, this is how I think it's going to affect the share price as we see sellers being mopped up every single day. And what happens to those shares? Those shares are burnt. They're gone. They're destroyed. Right? So those shares are not returning to the market to be sold again. When Vodafone's buying those shares, it's taking them out of circulation, and it's getting rid of them. So I think that this stock continually goes higher and higher. As you see, it's been following this kind of pattern here, and this takes me into the new year about the 78, 79 pence level, and then continues to go higher from there into next year. As I said, I'm looking for about 20% over the next 12 months. Why am I saying not to jump straight in today, Ange? Well, that is because Luka Mucic has warned about something called a U-shape, or a trough in the performance in Germany. And we can come off the graph now, thanks guys. Now, Germany is 28% of their revenues, right? Just to give you a quick breakdown, we've got 28% from Germany, we've got about another 15% from the UK, and then we've got these growth markets, right? Remember, we're looking for growth, and the growth comes from Turkey, from Egypt, huge growth in Egypt, and South Africa. They own part of Vodacom in South Africa. Now, with selling Spain, with selling Italy, and getting those, you know, non-growth parts of the business, then suddenly next year we're going to see a potential return to growth. But first of all, they needed the change, and the German business is really struggling in broadband, and he described it as a U-shape in Germany this year. We are at what Luca calls the peak of the trough.
Right.
And the set of numbers that come out in November probably aren't going to be that great, right? They might not miss expectations because he's warned about this so much.
So buy in September after he's...
So I'm just sitting back at the moment, and what I've done is I've sold puts. I've sold puts at the 72 pence level, the 70 pence level, the 62 pence level, and I'm just taking in that premium. So I'm not, hugely optimistic on the set of numbers in November. However, when those numbers come out, then hopefully the rhetoric will be change, and it will be change for the better. And that will be what I see as the last set of bad numbers. So every day you're seeing the buyback, you're seeing it's 4 billion euros over the 2 years. So you're seeing 10% buyback this year. That's been going on, and 10% of capital next year. That's on top of 6% dividend yield. So you're seeing a 16% return to shareholders each year, this year and next year, and that's replaced the 12% dividend yield. So it's actually a more impressive return to shareholders than it was with last year's. The balance sheet's now sustainable, the debt repayments are sustainable, because they've cut that dividend in half.
So for our trader friends, basically, if you're looking for an entry point after September, is that the
it's really it's waiting to hear it's a huge set of numbers, right? It's their H1 figures, H1 25, that will come out in the start of November. But the stock market's meant to predict these things. The stock market's meant to price in turns in fortunes. So it'll be really interesting to see how Germany's performing, 28% of revenues, if there's any green shoots of recovery in Germany. And one of the keys is the business to business, right? It's not you and I with our cell phones, buying Vodafone or our Wi-Fi. It's the business to business.
Having said that, I have actually used Vodafone on the business to business front, and they're absolutely rubbish.
Well, there you go. There's another reason to hold back.
Just letting you know.
And how long ago was that?
2.5 years ago.
And what have we said? That was the old company.
Yeah.
New Vodafone is about change, and it's about improving that business to business, because both Margarita and Luca have seen that it was exactly the customer feedback that you're saying there.
So full disclosure here, Reuters have their entire contract sorted out by Vodafone. So they sort out all the phones, all the contract, everything. But can you get anyone on customer service? Boy, is it difficult. And I do love a doer-upper, and I don't know whether the gallery can hit up my screen, because that is...
there we go, what a star.
And that is why I know so much about concrete and cement and building works, because that was my last project.
And that's it. That was Vodafone 12 months ago.
Vodafone. And Rich's trade is a longer duration than my usual turnaround for a property like that. But there was a lot of... Did you know that cement has and concrete, they all have a lifespan? It's like decay.
Right.
And if that's why you see the
that's why they
mixers.
Continually move the big Heidelbergs.
But even with the mixers, if they don't get to you in time, even with that thing going round and round, that's the end. Like if they're late, if there's a traffic jam, they just have to cut the losses. You pay for the cement, it doesn't chuck it.
Oh, that could get expensive. Oh, I think I've seen that on the TV shows. So just a reminder, this segment, very much education purposes, small part of entertainment, especially that last picture that Anne showed us. It's not trading advice. It's always do your own research.
Yes.
Always be careful with your risk management. But personally, that is why I keep banging on about a stock that traditionally has been so boring and such a terrible performer. Let's have a quick look at the all sessions here before we go to a break. It's a bit soggy. We're not seeing the same excitement that we saw earlier in the Asian markets. Apple small down, Microsoft small down, Netflix small down. It's a sea of red. Is that red for China? What's going on there in invade that 1% as well.
Yeah, but also this is kind of healthy, right? I mean, what would be really unhealthy and unsustainable is if you saw a sea of green every single day. But all sessions-wise, NIO, which is one of the Chinese EVs, ADR, that's up 5.71%.
Yeah, have you got that on the screen, on the all sessions
yeah,
screen?
all
there?
sessions. If you're going to hit up my screen, you can see that it's at the very top. NIO ADRs, you can trade that right now. JD.com as well, up 3%. CleanSpark, one of those stocks that's very well traded on the IG universe, up more than 2%. Riot Blockchain, you're talking about Bitcoin earlier, also up 1.6%. And Boeing has started. So this is the one that I was looking to see how
Boeing trade.
I know, but at the moment it's up 0.25%. So I'm just going to let it breathe for a bit, because who knows, maybe we might get an announcement in the next few hours, but I think it's going to be around 4 p.m. If history rhymes. And just last few that I just wanted to point out as well. So that those are the gainers, but let's take a look at the losers. So Novo Nordisk is down 2.9%.
What's that on?
It's, I don't actually know what it's on, but
shall we have a look over the break?
Yeah, have a look over the break. But to me, my humble opinion, yet again, not advice, but you know, anytime I see a dip like that, to me, that's an entry point for stocks like that.
So that was a party to political broadcast against the Lib Dems, by the sounds of it, from us. Not at all. Yeah, thank you very much for the trade expectations there. Who have we got coming up on Live from the Trading Floor?
None other than Chris Beecham. Stay tuned.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Forex. At its core, the simple concept of converting one currency to another. But the jargon can be confusing until you get to know it. First, let's look at the instruments that you can trade. Forex is traded in currency pairs, because effectively you're buying one currency and selling another. The currencies themselves are represented by three-letter codes: USD for the dollar, EUR for the euro, JPY for the yen, and so on. The currency on the left is known as the base or primary currency. On the right, the quote or counter currency. Popular pairs such as the pound versus the dollar are known as major pairs. Those traded less frequently are called minor pairs. They include currencies like the Singapore dollar or the South African rand. Pairs containing emerging currency, such as the Mexican peso or the Polish zloty, are called exotic pairs. Traders also use several slang terms in Forex. For example, cable means the pound versus the US dollar. It refers to the original transatlantic cable between London and New York. You may hear names like loonie for the Canadian dollar, which has a picture of a loon bird on the coin. Then there's the Aussie, the Kiwi, and the greenback. The movement for Forex prices also has its own term. A one-point movement is called a pip. In most major pairs, this refers to the fourth digit, to the right of the decimal place. So, if the euro-dollar price changes from this to this, that's a one-pip change. One important exception is when the yen is the quote or counter currency. Take the pound against the yen. Here, the second digit is the one to watch. Any extra decimal places shown in the price are known as fractional pips or pipettes. Each one pip movement is worth a tiny amount. So, Forex is normally traded in standardized quantities called lots. A standard lot is 100,000 units of currency. Small investors don't often have access to such large amounts of money. So, many Forex providers allow you to trade using leverage. This is where you can open a rather large market position with a relatively small deposit, known as a margin. Your profit and loss are based on the full position, however, and your gains and losses could far exceed this amount. So, when trading on leverage, it's important to keep an eye on the downside risk. Those are a few of the basic terms you're likely to come across when trading Forex. There are many more to learn, but understanding these should give you a good start on the road to becoming a confident Forex trader.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our training platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills, let's get better at this, let's accelerate that trading journey, learn to have confidence to trade, and make informed trade decisions.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, welcome back. Perhaps this is on yet. They're still, yeah.
I would just like to say 7:15, we had the results of the Japanese Prime Minister election come through. The market is really reacting to this in Japan. In the after hours, of course, the futures, we saw the initial move down as soon as the result came through. This is when we were on air, and it's continued to sell off. It's now down 4.8%. Big move. So you're seeing a huge increase in China, 13% in 5 days. But Japan being up all of its gain overnight with well, I assume it's a bit of a surprise. This we want to look at the FX market. Well, we see that the Japanese again, the yen first of all, that's around the 143 level, and the euro 159.5 GBP Japanese yen. I know I'm on a group of some fantastic guys in a trading WhatsApp group. And these guys love to play the sterling yen. That's down 1.4%, 191.5.
As Rich is talking, I'm also putting on a very quick scalp here, buy on Kering, because we've just had that deal come through. We're waiting on that. Montclair is one that you can Montclair and LVMH now finally after owner of LV. Let's check. Right now.
Montclair up 9%. Montclair up 9%. It did open a bit higher, so it's actually dropped back a little bit, trading at the 56.80 level.
That's interesting. You can get Montclair up. How come I can't get Montclair up on my platform? That's really odd.
Oh, must be premium clients only.
Must be premium clients only, because I can't get Montclair. I can only get Kering up. So, what's also one to watch is taking a look at also this checking. I want to check on Total Energies.
What we've had this morning, yeah, and not rainwater, so that's probably an improvement.
You blowing your nose?
Looking a lot better on the cold front, thank you.
We're keeping him on because he's still got that raging cold, but he got up and has joined us today. I did check on him yesterday.
I'm just going to cross the gallery. Might turn off there, Mike, so I can hear you perfectly, Chris. I love to hear Terence and Caleb there, but I like to hear the Beachy even better. How are you? Happy? Are you feeling better for this Friday, Chris?
Yeah, a lot better, thank you. Yeah, cold has dissipated quite a lot, so that's quite good.
At least you can tick that off now. You've had your winter cold.
Oh, kidding.
It's rain all day, so I'm sorry about that. But
in Japan, those Bush vendors there, was that a surprise result?
I think it was, well, it was certainly the result the market didn't want to think. That she was coming out and saying that the BOJ hiked too early, and she would probably, obviously BOJ being independent, she can't make them do anything but try and put a halt on further tightening of policy. So it's definitely a nasty shock for Japanese markets. Though, of course, we should know, as you pointed out, it is the end of the week trading, so liquidity is a bit thinner. It's had a big gain over the past, 3 weeks. So I think we've been a little bit of sudden profit taking based on news. Does it really change anything? Maybe not, but it's not quite the result that markets wanted.
And the carry trade doesn't seem to be having such a big effect. It's almost like that shock allowed everybody to to reduce their risk to that, and even if we get to 140, it doesn't seem to have such an effect. Is that right?
Yeah, I think so. It's unwound a lot of positions, so the impact wouldn't be so big if you had another rate hike. I think because the market pricing. I think this is what people have to understand about markets. They're very bad pricing in surprises. Markets don't like surprises, as the old cliche has it. If you see something coming, it's going to be the next crisis. They knew the Bank of Japan was going to hike rates in August, but they didn't know any quite such a strong tone, and it was just enough to set everybody off in one direction, really.
Chris, I'm expecting further pain for the Nikkei when we get back on Monday. Is that kind of what you're thinking as well?
There's some short-term pain, certainly. I think this is what we're feeling with indices anyway. This is nearly October. You get October for in stock markets, really, particularly in election years. US markets never do well in election years in October, or at least on average. So, could it drag everything with it? Quite possibly. You've seen these huge gains off the back of China. China's closed next week.
Golden week, right?
Exactly. So
yes.
That story takes a break for a while, which is a bit of a slight problem. Having said yesterday how bullish it was, I still think it is. But in the short term, it is a bit of a worry, I think, and if something is going to happen to US markets, October will be the prime time for it to happen.
And was this a tactical effort to release the news slowly, the bazooka, reload the bazooka 4 days in a row, or was it because it wasn't having enough of an effect? Why do you think they chose to do it that way?
Well, I think it's a way of keeping the news going into Golden Week. You might argue maybe it was a way of making people feel better about themselves as they head off for the week of holiday. The idea is now, obviously, we've given you the stimulus, go off and spend for a while, keep the economy moving. That's the kind of thing we'd like to see showing up in the data for this month when we get them.
So it's a big bit of, it's almost like sort of Amazon Day. Is Golden Week a big time for consumption?
yeah, I think this is what we're looking for is when people go shopping. Angeline, you're the expert. You tell me.
Think about Thanksgiving shopping,
Right.
but across a whole week.
Wow. Okay, so this is why it's been timed.
Yes.
Got it.
And don't forget, like, you know, I've been speaking to people in Henan, I've been speaking to people in Beijing. This whole reloading of the bazooka, you know, as Chris and Axel will tell you, and Rich, you've seen many times yourself, it's not about, you know, what they do, it's about how they make people feel. And all those cash-strapped, struggling people in China, worrying about their mortgages, worrying about making ends meet. No, it's like, hey, I can now sit back during Golden Week and, you know, everything's eased a bit, right? Banks there are being pressured by the government to allow instant remortgaging. So even if your mortgage is not up for renewal, right? Let's say you're tied into a 5-year or a 10-year, but you're only 1 year in and it's painful. Now all banks are being told, if you have someone come in, it must not be punitive price, but you must remortgage for them. So all those happy people, think about the people who can now go and they're sitting on, like, you know, mortgages with £1,000 extra, and now they can easily remortgage and have that £1,000 or 1,000 equivalent, right, in their pockets every month. That's going to make them feel so much better.
What's the negative effect of this? What the potential unintended consequence? Because we always see it with these.
There's always the concern that you have we're talking to inflation. You want to supercharge the economy, you want to get things moving, then you get maybe it's one of those moments where it is too soon to tell. If you've got it, nothing ever goes without consequences, and learn further down the road. I think the key thing as an investor looking at it is saying, what does this do in terms of your outlook? And I think it transforms it from being guardedly cautious to being a lot more optimistic. I think really not blindly so, but I think what we're looking at now is an easing Fed, a supportive Chinese economy. Even in the ECB, if you look at the French and Spanish inflation data this morning, that's coming down. You've got a world where the policy outlook has shifted dramatically. And I think
and with regards to the US, you know, does it cause a problem for US inflation to some time?
Maybe that's key. The Fed will be, but the focus is now on employment. Today you've got PC data. Nobody cares about PC data really. This is an argument that Angeline and I have on a monthly basis. Everyone thinks all PC data is important. Nobody cares. Nobody cares.
I think it used to be important. I think it used to be.
I think, but CPI takes the cake. So really, by the time PC rolls around, you've had a Fed cut this month. Who cares about PC today? Really, let's be honest.
Ooh, famous last words. I don't know.
Famous last words.
Imagine it pops in 0.2 above consensus now.
A nice way to sort of tick off the week, get everybody sort of more cautious again. But looking at longer term, yes, you could say, what if this happens, what if X happens? But at the moment, we're looking at what the Fed is doing now, what the outlook is, and that's for declining inflation, a weaker but still solid inflation job market. That, I think, points to a solid outcome for earnings. We'll start to see that maybe coming through in Q3 earnings when that starts to mitigate.
Interesting stuff.
Non-farms next week's going to be really interesting, isn't it? Because I don't think you know you're going to have any effect from interest rate cuts now. You know, that's not suddenly changed hiring decisions in the short term. So do we see a number below 100,000 potentially for non-farms next week?
Yeah, and maybe the market can brush it off. Really, it'll be a case of look at what we have with the consumer confidence data this week, and looking at consumers being more cautious than they were, and that boosted the chance of another 50 basis point rate cut. So maybe that's how the market will take it. If it's not, if it's abysmal, then yes, a bit of a worry. But if you have poor payroll report, if wage growth continues to slow, the market might just say, oh well, this is something you can account for with the Fed definitely moving 50 basis points again in November, even with the election the next day.
Slightly closer to home, next week we've got a whole bunch of UK retail numbers. JD Sports, we even got the famous Greggs for the, you know, see how those vegetarian
sausage
hostages
roll.
are doing.
Yeah. I love that vegan sausage roll. I trade that when it helped the stock, boost the stock. But which ones are you looking out for? I know JD Sports a big one amongst our IG clients.
Yeah, I think that's a key one to watch, really, is how UK retailers or UK consumers are faring, because this is where the recovery is much less certain. But the Bank of England that isn't really keen on cutting rates again, or certainly isn't in a rush to do it. So we'll see what the retailers say. If they're beginning to maybe pick up over the summer, then yes, that's one to watch, I think. Undoubtedly, this week's weather is probably having impact in the next round of trading sessions. But I'm fairly optimistic.
Chris, there's a Greggs under the IG office here. Have you ever tried the vegan sausage roll?
No, I dread to think what's in it, to be honest with you. I've never been in a Greggs. I can't remember the last time I was in a Greggs.
I actually like the stock. I like the stock. I think they've got a strong and stable business plan, and they've got good price points.
Yeah, you can't argue with the way they've expanded, and they continue to be this dominant feed. So from a long perspective, very, very strong performance. And with the inflation coming down as well, you can't get away from inflation. With that coming down, that makes them more competitive. You can expect to see probably a resurgence in their dominance in the market, really.
What's your go-to snack when you're feeling ill, Chris? Mine's Lucozade.
Really? Which flavour?
The original, the OG. What about you, Chris?
I dread to think what's in it. I'm always a Lemsip person. Makes you feel better.
Oh, I like a Lemsip blackcurrant.
Other brands are available, of course.
Now, on our IG app course, there is the top 100 traders, which Pete Ward reminded me I'm probably not part of, but they do look at the most successful traders and their favoured positions. So I'd like to give you a pop quiz whether you agree with these or not, Chris, at the moment. First of all, long on oil.
Yes.
Short Wall Street.
No.
Long Vodafone.
They're always long Vodafone.
He's biased.
What a terrible stock. What a terrible stock that is. Everyone likes the yield, though, don't they?
Short the German 40.
The thing about record highs is they keep getting higher. So you've got to be. Yeah. No, I don't agree with that one.
And finally, one that I think both Ange and I have got on is short cable.
In the time frame, maybe. I think in the short term, maybe it's gone a little bit too far. Yeah.
Excellent. Right. Thank you for our Friday pop quiz. Are you joining us next week? I do.
I think so. Maybe Monday.
Yeah, Monday and Thursday.
That'll be 3 days in a row.
Yeah, and we have Luke Morano on Tuesday.
Chris, thanks very much. Feel better over the weekend. Enjoy watching the cricket on television this afternoon.
Thanks.
Cheers. Right, everybody, coming up next, we have market measures.
Stay tuned. Your thing keeps... Hey, welcome back. It's Market Measures, and what have we got today from Sahil?
So Sahil has given us a wonderful way to finish the week, because this week we've been looking at our guide to options, right? Beginner's guide to options, and he's given us quite a few things this week, that 4 favourite option positions that you can put on. We've talked about skew, and we are now today looking at duration and volatility. So let's dive straight into volatility. Managing early is an approach used to reduce option position risk by shortening the holding duration. It means that you roll positions or close early with a 50% max profit, right? So it's basically, once you get the position on, instead of holding it all the way to expiry, you either close it early or you roll to the next month. When first starting out in options trading, you may wonder what time to expiry cycle is optimal for options, and why can't we use a shorter expiration cycle? We look to put on short premium trades roughly 45 days to expiry, and the reasons for this are capturing theta decay, And do you know what theta is?
Yes, it's time to the expiry.
Exactly. So theta being time.
I love this because it ties into like where is the sweet spot, right? This is exactly telling us, Baby Shark is telling us, where is the sweet spot, right? Where is the nice area where I'm more than not likely to take profit?
And you're going to love the chart that we've got for you coming at the end of the presentation, because it shows all those different theta decays and how aggressive they are at what period of the cycle. So remembering, this is coming from tastytrade, right? These guys are options experts, some of the best in the world. They've worked on the Chicago Board of Options Trading, and now they're giving you their top tips. And what you do 45 days works as balance the trade between risk and reward. It gives you more time to be correct. If a position moves against us, we still have time for it to come back. If it's a winner from the beginning, we can manage it early. So those dream trades that sometimes you put on and you're making money straight away, then it gives you those options to manage that early. And there it is. There's that beautiful graph we've got with time decay of different implied vols. Right, so I'll say the highest vol being the blue line. The volatility we are at the moment is probably red, third from the over 4 months away from expiry, because this is looking at 60 to 80 days. That you don't get that much from the time decay. Your real bang for your buck, right? The times that you come in between a Thursday and a Tuesday, then you get some beautiful time decay coming in, reminding that theta is your friend if you are short options. Right? Theta is your friend if you're short options. Theta is your enemy if you're long options, because you're paying it away every single day. Markets move. Right, all you're doing.
Happy days. Just collect.
Collect.
Take it, bring it in. Yeah.
So this is the theta decay. You can see from that white line, that is 45 days to expiry. And then the tasty experts, they talk about holding it for about 21 days. So from 40 day, 30 day, 20 day, you can see that's the real extreme pickup in theta decay. Now, when does it flatten out? Well, it flattens out looking further away than 45 days, right? So that means that each additional day further away than 45 days to expiry gives a smaller % increase in the time value of the option, right? That's a beautiful graph, isn't it? It looks like more like the wind passing over a wing of an airline.
The aerodynamics.
The aerodynamics, thank you very much, Anne. Here to save me.
After you've had some dodgy drugs.
like Chris's Lemsip you're talking about,
like
is that
Chris's, right? Yeah, Lemsip. I think he's a lemon guy. I'm more like a black currant kind of person.
But you put yourself to sleep on an aeroplane, do you? If you're...
So I am one of the lucky few that I just fall asleep the moment I get on to a plane or like any vehicle, boat, yeah. And I often have, everyone's like going, that's a gift. I often have friends remind me like, yeah, we had this, it was a trip of a lifetime because we hadn't seen each other and we were like teenagers, but we knew we wouldn't see each other again once we all went our separate ways. And we thought we had 13 hours to like catch up with Ange. No, she slept the whole 13 hours.
No.
Yeah.
Oh my goodness. The only time we've managed to do that was coming back from my 30th. And 4 of us, I always fly economy over to America because you get on the plane at 11 a.m., you watch movies, have a glass of wine, you know, and enjoy that time period. So, you know, I'm not going to sleep from 11 a.m. till 7 p.m. But on the way back, then that's when you get on the plane at 9 p.m. and you get off the plane at 6 a.m. I want that sleep. So I fly premium economy coming back. So coming back from Vegas, we all took the premium economy, all sitting next to each other. Before the plane even took off.
We like the movie
Asleep.
Hangover.
That was my 30th birthday. I think they based the movie upon my 30th.
Where's Rich?
No, all 4 of us, boom, zonked from the time we took off to when they came and had to give us a shake. We hadn't slept much over the previous day.
Do you have a camera that you kind of looked back and thought, where did these photos come from?
Yeah, and it's so long ago, it's on the DVD. My friend put all of the photos together, you spin me right round. Wonderful. What happens in Vegas stays in Vegas, apart from the DVD.
On to Theta Decay.
So, theta flattens out past 45 days.
Is it theta or theta?
So
Americans say theta, you say theta, I say
tomatoes,
banana,
you say
banana. What is it? Is there a...
You can tell it's a Friday and we're getting close to the end of the show, can't you? Because
really
it starts to get that Friday feeling.
Yeah, when I get a bit kind of demob happy if I'm ever so slightly tired, so...
Right, so 45 days to expiry strangles displayed the most profitability.
Great, I love a strangle. A short strangle.
Exactly. So the short strangle with 45 days to expiry since 2005 shows that the 45 day is you're receiving more P&L than the 75 and the 110. Right? So you're receiving $50 on average P&L per trade if you hold the strangle for 21 trading days in the 45 days to expiry you put it on, or the 75 or the 110.
And you hold it for about 21.
And you hold it for 21 trading days. The average P&L per day, 166, 147 or 136. So you can see why the guys in Chicago really think that that 45 days to expiry is the key one.
Do all these options guys have like multiple alarms on their phones?
With how many days there is to expire? Yeah, because remember, of course, they roll. You know, it's a permanent state of rolling, but the 3rd Friday of every month is when expiry is. So then you obviously start looking at the next month that is that's coming up. So the shorter duration strategy yielded a lower average P&L and experienced larger losses, right? And larger losses are not what we are looking for. The average P&L on 21 days to expiry, so shorter than that 45, right? If you put it on and you held it to expiry, average P&L was $30. Your win rate was 82%, both in the same instances. But the largest loss experienced in that study was $3,173. And a reminder, that's going back to 2005, right? So 2005, they looked at all these different trade strategies. If you managed the 45 days to expiry early, i.e. you took it off after 21 days, your largest loss was only 1,106 because you've got more opportunity to, you know, to manage that position. Now, holding trades closer to the expiration date results in a greater volatility and lower average monthly return, right? So that is why we take them off after 21 days. So holding trades closer to the expiration date results in a greater volatility and lower average return. You can see those results.
And is this across Across instruments, across asset classes.
They don't care what they're trading. This is the best advice as a whole, and the takeaways being that around 45 days to expiry seems to be the optimal duration for options to take advantage of theta decay and be capital efficient. Right? So managing early helps reduce the risk. Strategies with the same holding duration do not exhibit the same performance. Trading closer to expiration almost always represents higher potential volatility and risk. That's been a really good series of options for beginners, hasn't it?
It's been great. I've learned so much this week. I don't know about you guys, trader friends, but you know, coming from the spread betting side of things, this is really interesting too, because now, you know, I understand how to take a position if I've got a neutral bias, or how to have a covered call. Why not have a covered call if I have a castle of a trade? But it's all really interesting stuff, and it's nice to also know the kind of sweet spot, if you like.
This is such an important part to get the duration, right? Just remember that duration and volatility.
And we know that our trader friends are really also enjoying this, because we just had an email come through, and it was a lovely, lovely person that's been watching this morning, Morteza Porja Hungary. I hope I said that correctly, saying, "Good morning, Ange and Rich. I've learned a lot, and I'm really happy with the morning show. Please, please, please keep the show going. It's the best show that IG has put forward." Woo! Thanks, Martez. Everyone in there is going like woo and clapping, so that's great stuff.
And thank you very much for that email. Well, we can promise we'll be back next week on Monday. So shall we have a look at what's happening next week? What's coming up?
What's coming up? Roll it, guys. What's coming up? Soon.
And what's next?
No trader gets it right every time, but you can improve your chances by knowing which pitfalls to avoid. Here are 5 of the most common trading mistakes. Number 1, not preparing properly. Many beginners rush in with misguided confidence and are punished for it by markets. Take the time to learn about the financial markets and trading strategies, and consider practicing with a demo account before using real funds. Number 2, trading without a plan. Failing to stick to a trading plan, or trading without one, is a recipe for disaster. To avoid this problem, develop a personal trading plan and use this to decide when to enter and exit trades. It's a good idea to keep a trading log. A trading log is a record of your trades and the reasoning behind them, as this can help you adjust your plan over time. Number 3, over-reliance on software. While technical analysis, advanced charting systems, and automated algorithms can all enhance your trading, blindly following a software program is unwise. Remember, these are just tools, not foolproof strategies. Make sure you understand how each system works, so you can make informed decisions about whether or not to trade. Number 4, failing to cut losses. All traders, no matter how skilled, will inevitably enter some losing trades. And while you may convince yourself a market can't keep going against you, one of the most dangerous misconceptions is thinking you can always turn running losses into profit. So, it's critical to decide when you will close losing trades and to remain disciplined in the heat of the moment. Use stop losses to ensure you exit according to plan. Number 5, overexposure. Beginner traders often fall into the trap of overtrading. For example, opening a host of positions in the wake of an early success, or spreading capital too thinly in an attempt to trade a wide variety of assets. But with thousands of markets on offer, you can't take advantage of every opportunity. So, sit back, consider your trading strategy, and only open a new position if it fits with your plan. To learn more, join the IG Academy for free.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
An IPO is an initial public offering. It's the first time a company offers its stock to the public. Following an IPO, a company ceases to be a private enterprise, or in the case of privatization, a government-owned utility. It becomes publicly listed, and its shares are traded on a stock exchange. So why would a company choose to go public? Primarily, it's about generating capital. If a company needs funds to invest in its expansion, it can either borrow the money or sell the shares via an IPO. An IPO has the added benefit of generating publicity for the company, boosting its reputation as a successful, established business. So, what does this mean for traders? Well, IPOs often see a flurry of activity as investors buy or sell new stock they believe to be under or overvalued. This can create volatility, which, while risky, can mean opportunities to trade.
Welcome back. Friday is almost upon us, but let's talk about some of the items that you can trade on, not just today, but in the coming days. And my goodness, Rich, September's almost over.
Well, so Monday, the last day of September. So, of course, always big things happening at month end and the beginning of the new month, including in our economics. So let's look at the economic calendar for next week. A reminder, Japan's going to be big on Sunday night, going into our Monday morning. We've got retail sales there and industrial production, but of course the big story in Japan, as we know, is the new Prime Minister. A little bit of a surprise there. What have we got the rest of the week? Well, we've got some inflation numbers out of Germany on Monday. We've got the consumer credit numbers out of the UK, which is a big week in UK retail next week that Ange will take you through soon. We've got the Chicago PMI, Dallas Fed all on Monday with Powell speaking as well. However, then we move on to October 1st. October 1st is going to be big for the news because, of course, we get US PMIs on the first day of the month. The manufacturing PMI coming out on Tuesday, along with the JOLTS opening. So it's a big day both for, are we slipping into recession even further in the manufacturing world, and are we seeing less and less job openings, i.e. less hiring. So that's an important one on Tuesday. Then Wednesday, we've got ADPs going through into Thursday. We've got ISM, it's services, so we get the service version of the ISM. So that's going to be big as well. However, then welcome to Non-Farm Friday. So a week today, it's going to be the big non-farm payrolls.
That's going to be the key one, right? Because I think
it really is, yeah.
This one and the next jobs number is going to be the key numbers as to whether we get a 25 or 50.
That's exactly right. So we got two jobs numbers before November 7th rate decision and yeah, it's going to be a key one.
Let me just take you through the corporate earnings as well, because we have a huge amount coming out from the US side first. But before I get to that, in this session, might I add, look out for Boeing, because as I said, Boeing is likely to meet unions. This is in a bid to end this crippling strike that's been going on for 2 weeks now. And what is key about the story is that they have actually come out. Boeing has said, best and final offer, guys. We're not going to give you any more. But the unions are standing pat on their ask of a 40% pay rise. So quite a huge deal here, and we've been waiting on this for some time, so keep an eye on that. As I said, markets and these sort of news tends not to have some form of, there's no guarantee it's going to come out at 4 p.m., but you know, these sort of stories, they tend to rhyme, and if it rhymes, then perhaps we might get some sort of outcome around 4 p.m. UK time. In terms of earnings coming up, we've got Carnival on September 30th. Those of you that trade this stock, they've done really well early on in the year with all their cruise packages, been very aggressive on that front, and Carnival does operate on sort of the lower end of the package deal spectrum as well. But what's key now as well is their forecast, given that interest rates are coming down, more and more Americans are traveling. Bless you if you're trying to get an internal flight cheap, because that ain't going to happen. Also, we got Nike, Rich's favorite, on October 1st, so we're waiting on that as well.
And that'll be after hours.
Yes, after hours. And other ones to look out for: Conagra Foods, October 2nd, and Constellation Brands on October 3rd.
Just a couple of UK ones to watch out, of course. Greggs. You know, we're all interested in Greg's numbers coming out next week.
I accidentally poisoned my husband. It wasn't on purpose. I needed to test him out on the vegan sausage roll to see if he could tell it was vegan before I bought the stock. And he ate it not knowing that it was, he couldn't tell, but he didn't know at the time that he was allergic to corn.
Whoa, what was the result of that? Did that go down well, so to speak?
He spent the rest of the day vomiting.
Oh dear, dear, dear.
And I bought the stock.
Elsewhere next week, we've got Tesco results. Tesco, where you get your best clothes, and Carnival, JD Sport, and JD Westmans, and yes, it'll be a really interesting week for the UK consumer.
Yeah, quite a big week too, if you're interested in that dividends. We have yes, we also have dividends out from and just taking the IPO front as well, nothing of note, but it's good to keep an eye on that, because we're not seeing a revival in the IPO space.
As we get towards 10 a.m. Since we last looked, we again,
I know.
Barbary up 6. The question we had, is it too late to buy this? It was 7 months too late.
How these stocks have run higher, because at some point
it would look that way. Take a look at the European sector.
as well. Got
to hit land in Florida potentially.
And keep that one in you as you come back from your weekend, because we had a huge, you can see
conversely, Bitcoin.
right move.
Oh.
Come on, Bloomberg. About this. Let's see if we
Let's
see much movement.
has it been
92. EA Sweeten's takeover bid for a right move to 8.29 billion.
I'm assuming it must be the stock
775, so that is confirmed.
then Australia's stock takeover 8.2 billion sterling. So the new proposal comprises an offer price of 775 with a 60% premium to the last night's closing price. We need to find when the last update?
The last update was around 14 minutes ago. Let me see.
Oh, that on the price.
Oh, not the price, but the last update on that story. I thought you meant. Yeah.
Oh, yeah. Anyway, we
keep an eye on that.
you see. So there's the original spike up. So we had a spike up to 677 as the news hit the tape. And that was at 928 as it hit the tape.
So 928.
But the stock is selling off down to 659. So volatility there in Rightmove, volatility we've seen in Japanese equities since that. So we've had a couple of breaking stories on air this morning.
Incredible. Japan and now Rightmove. And just before we bid you goodbye, thank you for all your answers so far, but we still don't have a winner. The question was, on the dice, when it was first invented, those dots that represent the numbers, what were they called? So whilst you're thinking, because we have only 2 minutes left.
Did we have somebody get the right answer on that one?
No, not at the moment, but it is related. It is related to trading. Do you want to run that over? But I can tell you that the person that won yesterday was dice, first invented for divination or for gambling, and that was won by Daniel Ajulo. The prize is coming straight at you, Daniel. Thank you for your address. And it's amazing. Our clients and our trader friends come from everywhere. He is from York.
Excellent. Absolutely well done. That's the pin on the way up to you.
Yeah.
Now, Anne's favourite moment of the week?
The favourite moment of the week.
There's been so many.
There have been so many. It would probably have to be you and Pete Ward facing off.
I must say that's probably my favourite moment of the week as well. Pete and I are off to the cricket this afternoon. If you see us, please come and say hi to me, not to Pete.
And also, before we go, we are going to have Axel Rudolph with us on Monday. And that as well, Anthony Crimp, if you're listening, he'll be answering. I'll also be answering your question about the Golden Cross.
I've been Rich McDonald. This has been the wonderful Angeline Ong. Have a fantastic weekend to everybody. Have a fantastic weekend, Ange.
S&P 500, new all-time highs. China opening the liquidity spigot. Saudi Arabia abandoning their $100 per barrel oil price target. Gold new highs. Oh boy, it was Thursday. This is overtime. It's the abridged version on Thursday. We do have the prediction trade coming up at the bottom of the hour. Stick around because Robert Cahaley, the founder and lead pollster at Trafalgar Group, will be joining myself and Jeff Joseph. But before we even get there, I'm Chris Vecchio in New York, Ilya Spivak's live in San Francisco, Dylan Radigan's in Milan. We're here to take you through the next 25 minutes or so until we get to the prediction trade. But the futures market's open for the rest of this hour. And what a day it was. Micron earnings blow away surprise competition yesterday. Market was looking for something a little bit weaker. No. Micron here, as we turn to the charts, leads the explosion to the upside in the NASDAQ. It's quite a day. We closed yesterday right around $94 a share. Here today, 109.88. Not bad if you can get it. The NASDAQ enjoying that ride, that 14.7% ride higher on Micron's back, closing here at 20,346 and a quarter. That is through the August 22nd swing high, that bearish engulfing bar key reversal, that capped price action. It seems like a new era of bullishness is upon us, and I say that because my good friend Ilya, welcome to the side of all that is good.
Don't get me any credit yet. I'm not long. But I absolutely exited my shorts overnight. I was texting you overnight saying, okay, the markets are reacting to this China thing. And I mean, I got out real early once China started to move. So I missed pretty much the entire wild ride because as soon as it started to perk up and I saw why, I was out right when I texted you about midnight Eastern.
Thank you for that.
And so by then, I was like, you know what? I'm washing my hands of this thing. I'm going to bed. I wake up this morning and I see screaming shooting stars on the indexes. And I can't figure out any good reason why this was met with such aggressive selling. Because actually what China said was flimsy, but very much in the right direction for what the markets have wanted to see out of them. And so, and not at all like the letdown from the monetary stimulus earlier in the week. So you'd think this was actually a tangible reason to go higher. And then as soon as the U.S. Cash equity open is upon us, this thing gets slammed back down. It's been digesting since, but I'm not really even sure what to make of this. But I'm not a seller again until fool me twice. The point is, you can't fool me again, as the great man said. So I'm gonna wait for a little confirmation. But this is not looking good for risk appetite that they can't make hay of this. This was legitimately good news.
SMCI is hit with this DOJ investigation. That news comes out at 10:40 a.m. Eastern time. If we go to the NASDAQ here, and we're going to just put another marker down on our chart for 10:40 a.m. Eastern time, it's yes, the selling has already started by that point, but that's when we kick into the next gear lower. We've erased that by the end of the close. The SMCI related selling pressure 10:40 a.m. Eastern onwards, we've more or less knocked it out. So yeah, we were coming into today with a little bit of softness there. GDP report this morning came in at 3% for the second quarter, revision higher, clearly not recession. We're still guiding towards 2.5% to 3% if you look at various growth trackers for the third quarter. Jobless claims better than expected and actually starting to tighten more, which suggests recession is perhaps getting even further away. Maybe this is an unwind of 50 basis point rate cut odds somewhat. Beyond that, though, I think the liquidity gauges of this market are telling us really all that we need to know. You take out the news of NVIDIA, of SMCI, excuse me, it does weigh down NVIDIA. Crypto is having a fantastic session today. Gold, silver, the metals are continuing to push up. But this oil situation, you guys are doing well. I'm getting slugged now. 3.27% to the downside. Dylan, you said this is working for you today. I think this has been
it's the only
single
thing, baby. It's
The only thing. The only thing. I mean, I get the bonds stopped going down, which I look for me. The failure for the bond to continue lower was a victory. But anyway, yes, oil was lovely.
Yeah. So let's talk about this quickly. This has perhaps been the most efficacious trading strategy that has worked for a number of months now, particularly in the wake of us having benchmarked the Hamas Israel fighting since October 7th, right? War, whatever, incursion, special operation, as Russia might put it. You have been very effective at whenever there's a headline in here, you wait a few days, you fade at the news. We had headlines the last few days of Hezbollah, Israel, the pager bombings, yada, yada, yada. This is working again. When will this stop?
Clean it is technically. I mean, it rebounded, retested the underside of the range from June, just ever so gently kissed it and came right off.
Dylan, when does this trade run its course, though? So you fade the oil move on geopolitics again.
I mean, I just take the winnings. You know, I mean, the thing is, my whole thing with this is we've had this all the whole year. This is what the third or fourth time that this thing has cashed in for me. And you always ask me, you know, well, what about this or what about that? Like, I have no idea when or how it's going to go up. I just know that when it or how far down it's going to go. All I know is when it gets a bid on geopolitical fears, if you sort of let it sort of settle into that for a day or two and buy some puts, you'll get paid. You know, I think that I don't think it goes away. You know, because I was kind of comparing it in my head to the NVIDIA earnings, where, you know, NVIDIA had these monster earnings in their most recent quarter and the stock didn't do much of anything. And our discussion was, oh, well, the street finally has a handle on them. And so it's not that NVIDIA is not doing so well, it's that that the street's gotten better at anticipating what NVIDIA is and will be. Mm-hmm. And you would think that the street might start to normalize the fact that an oil bid on the back of geopolitical fears doesn't affect oil supplies, and as a result is not actually material to oil prices. And yet, I think this is at least the fourth time this year where you've got a really nice rally in oil on some humanitarian military abomination. I think all of it has been Israel. None of it's been Russia this year, but, you know, might as well be Russia in the other years. And every single time, I mean, I'm going to say this, I'm speaking with such confidence. Obviously, this is a recipe for a disaster, but it's been the most reliable thing. You know, I guess the question is, how long do you let it run? I sold half, or I will sell half, I should say. Like, I'm in my mind, I'm ready to go. Like, it's already rolled over. Especially because I got so many losers around me. I don't want to be an idiot and not book something that's working, honestly.
I got to say, this feels like a total overreaction the past 2 days. And I know I'm talking my book to an extent, but the two headlines that we've seen that have really driven this movement, maybe three, you know, Israel and Hezbollah perhaps trying to work on some sort of ceasefire for 21 days. Netanyahu, when he was leaving for the U.S. to go speak at the United Nations, said that he was partial to it. He lands in New York, bless you, says that, no, we're backing away from the U.S.-French deal that's currently being negotiated. So interesting that we're still staying lower after that. Secondly, Libya in the east resuming perhaps oil production moving forward. They have a unique situation where the government, the West recognized government, is in Tripoli, but the non-Western recognized government controls most of the oil production. So they threatened to shut it down a few weeks ago. It looks like it's going to restart. adds about 1 million barrels per day back to markets. And then this news about Saudi Arabia potentially abandoning their $100 per barrel oil price target. Some of the reaction here makes it seem like OPEC Plus is just going to go haywire with trying to boost production moving forward.
You mean it hasn't gone haywire already?
We heard that they were.
Do you mean haywire or do you mean hog wild?
Either way, we know that there's a bunch of spare capacity in these OPEC Plus countries right now, unlike here in the United States. And the plans that, this is why today's so confusing. Yeah, Saudi's going to cut back on their oil price target. But in the very same report, citing the same officials that leaked this information to FT, they made mention that the December production hikes will go through and will account for about 180,000 barrels per day additional per month. So the net news that we've heard this week is that we may be getting, if we want to be generous here, 1.2 million barrels per day added to supply per month moving forward. Is that worth $6 to the downside or $4 to the downside on oil? I don't know if that's really relevant here, especially with the backstop of China. Ilya, this China thing needs to be unfolded, unrolled a little bit more here, because this is different than what we heard earlier.
It is different.
What is different about the announcement today than what we heard on Monday, and why this actually could be something that sticks around for a little while longer?
So before we get excited, let's keep in mind that China did not say anything substantive as far as specific policies, numbers, indicators, nothing like that. But it issued a statement of intent that marks a very significant rethink from the people that you want to have that happen with, essentially. So for years now, and we talked about this in light of what China tried to do earlier in the week, for years, China has attempted to revive its economy by making money cheaper. So various credit easing measures, be it reducing banks' reserve requirements so they have more money available to lend, or outright cutting the benchmark interest rates, which they did again this week, the 7-day and the 1 year, or providing extra liquidity facilities for buying stocks. All of these things basically meant to dump cheap credit and get economic activity encouraged higher, and all of it failed. One round after another. And it failed because there's no demand. You make money cheaper, people still have to borrow it and spend it. And if they're borrowing it and stuffing it into their bank accounts, which is exactly what's been going on, and state-sponsored private sector investment basically stops because nobody's spending, not households, not businesses, not regional governments, the economy is dead in the water, which is where it's been for the past 5 deflationary quarters. And then you get overnight here Xinhua, which is the official government news agency, reporting that apparently Xi Jinping and the Politburo, which is essentially a committee of 24 of the people that really run China, they went into a room, talked a bunch about the economy, came out and said, we're ready for fiscal stimulus.
Mm-hmm.
And that's really what everybody's been waiting for, because that actually creates demand. If the private sector isn't spending, the way you get the economy to move is somebody has to spend in their stead. And in the West, we've learned this. This is why COVID saw such aggressive fiscal stimulus, which ultimately held the whole edifice together. When people looked at China earlier this week and they cut rates again and blah, 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 they said, well, more of the same. None of this is going to work because nobody's spending and nobody wants to. This is different because apparently somebody does. There was a Reuters whisper number out there that the Ministry of Finance is going to sell a 2 trillion yuan special bond this year. That's about $285 billion at the current exchange rate. So not a small amount if it's real. Nobody's officially confirmed it. There's no knowing what this means in practice, but Xi Jinping has been resistant to this for years, and it's his call. And now that he's not resistant to it, apparently, that's a big head change.
I've done my fair share of kvetching in recent days on Twitter here on Overtime, saying like, yeah, this is great, but Xi Jinping's allergic to fiscal stimulus. They don't like the Keynesianism. They don't want to do the direct aggregate demand. The whole supply side reform is reducing barriers to the facilitation of the exchange of services and goods. You can lower the barriers all you want, but if people don't actually want to exchange the services and goods, then the barriers could be 100 feet high or 0 feet high. No one's walking over them. It's a confidence game, which is why we talk about those surveys, Ilya. 56% of people are saying the incremental yuan that comes in for, potential disposable income is going right into the bank account for savings. So perhaps these are the efforts that provide that spark to get things going on. And Dylan, you want to talk about Superglide, my friend? Let's paint a very bearish picture of the world. Oil prices are cratering. The Eurozone, the world's open air museum, is in the tank now. If you look at the PMI data, is because people don't have money to spend. They can't afford to fly there and buy luxury goods and go to museums, right? Certainly that's the case in China. In the United States, the economy's been running hot and consumers are feeling the heat. So if you think about how Europe's going to grow moving forward, you're not looking too well right now. But you know what? The U.S. is holding up. And now we have a gigantic macroeconomic stabilizer coming down the pipeline. The world's second largest economy is pouring gas on the dwindling embers of their fire to try to resuscitate them. So if demand is falling in the US because of consumers losing purchasing power and growth is receding in Europe, I'm not going to say Europe's not going to go into recession, but Chinese consumers spending more money and, more importantly, using that money perhaps outside the bounds of their economy would help reduce a European slowdown. I think this is something that's going to keep the global economy on more stable footing for a good chunk of 2025 now. The fiscal stimulus from China was like the missing piece of the puzzle. How effective it is yet to be seen. But you now have a window of probably a few months where the market's going to buy this narrative, just like it's bought the narrative previously. We bought it in 2022? We're reopening. Took us 3 months to work through that. Even this year, we're getting all the stimulus measures. Took 4 months to work through that before we realized nothing was there. There was no meat on the bone. This is still week one. I don't think people should be trying to fade an asset pump when the central banks are really all operating in unison right now.
I mean, and that was the point that I was edging towards yesterday. And obviously the price action today is much more convincing than anything that we saw yesterday. But it was really, it's sort of a classical don't fight the Fed kind of a simplicity, which is if China says they're going to back up the truck, believe them. Yeah. I mean, understanding, I don't think it diminishes the integrity or insight of the fact that the spend is grossly inefficient because of the hole in the bucket, because a lot of the money gets trapped into savings. But at the end of the day, free money, trillions of dollars in effectively new free money changes the value of assets to the upside. I mean, I guess the question I would say to you, Ilya, and is after seeing the reaction now, would you be willing to get long or longer metals, commodities in general, Chinese equities, Australian dollar, like all the sort of linear or sort of adjacent China proxy long type situations?
Well, so I think that's really the key here, because I exited my my shorts when this news hit. So I covered my ES vertical, I covered my NQ vertical, and just got out. So as I look at this now, would I go long here? I don't think so. Would I go short? No. And here's why. When you look at the heavy selling that met all of this at the open on Wall Street, you sort of go, well, what didn't you like about this? And yeah, of course, the indictment for a major chip maker is not helpful, but that came later, and and as Chris has mentioned, we've retraced those losses, but there's still a big chunk in there. So for whatever reason, Wall Street didn't like this. And then when you look at the Aussie dollar, it didn't break out. It rallied, there's no question, but it's failed to make a higher high. It's failed to close above yesterday's aggressive reversal, and that makes very little sense at face value, because you go, well, the RBA just was very hawkish earlier this week. They're resisting the call to cut rates. Now you get this news out of China that this is an unadulterated good thing for Australia. This should be a higher Australian dollar. It's not rallying. It's not clearing any key levels. It's back up to the top of its 2-3 day range. That's really it. That's very eye-catching, that there is this level of circumspect reaction to news that should be generally good by any stretch. And so I'm going to need to see some confirmation one way or another.
I just made a position adjustment because I didn't like the days to expiration on the NASDAQ trade there. But now 96 days, long the 22K, short the 22.5. It's actually in the NQH5 contract. Ilya, last night I peeped that you had a long MES trade on.
I bought a short. I bought a put vertical and then quit and then got out.
Oh, it was a cover. It was a cover.
Yeah.
Okay. I was like, oh, he came over to the light side. Finally.
No. I was getting out. I got in and then rapidly got out once the China news was there, because clearly things were on the move, and they were on the move for reasons that made sense. They should have been on the move. This is a big thing.
I like trading to 22K by the end of the year, because the head and shoulders pattern breaking out of our symmetrical triangle gives us 22K. I could be with you
in this overnight here.
Water's warm. The water's warm.
So I'm watching exactly what this does. We have the PCE tomorrow. That should not be that big of a deal, although it is expected to have a rise in core inflation. And if you were to shake loose some rate cut expectations for next year, market looks kind of shaky. That wouldn't be good for a shaky market to digest.
We don't need as many rate cuts as we previously assumed, because the economy is better than anticipated.
I think you get news like you got today, which is unadulterated good, and you can't make a global rally stick. That makes you question how much risk appetite there is in this market. And as you know, it's the Italian elections indicator, right? Does the market care about the regularly scheduled collapse every several years of the Italian government? And if the market is risk on, no. And if the market is risk off, yes. Because it's about overall sentiment.
Sure.
Should we care that it goes from 4 cuts to 3 for good reasons? Maybe not. But will we? If the market is risk off? Yeah.
We will. Yes.
Yeah.
Yeah, if the economic data is bad, or like it looks like inflation's heating back up, which maybe gold's telling us it is. New record high close today, 2694.9. Don't get tired of saying that as long as I'm still long.
Yeah.
Feels pretty good to say. Same thing for silver, not a record high close, but higher by 0.94% now. Interestingly enough, we still end up closing lower than yesterday's open. That is a pretty ugly looking bar. I don't know if it means that this is done just yet, but I would point out here, if we're trying to see a potential swing in the metals, the 5 EMA in silver is not really where you want to look. Just go 1 tick up the Fibonacci scale. And if you hop on over into the 8 EMA, you'll see that we actually have been holding that on a closing basis going back to September 11th. So 8 EMA in silver is your guiding line in the sand. It's the 5 EMA in gold, the 1 week moving average. These are momentum markets, and I'm a momentum monkey, right? I see lines that are going up. I'd use my crayon and technical indicators to say which way the line's pointing. When there's an agreement like this, I see no reason to adjust positioning. I've made mention before that, the most comfortable way that I sleep. To quote David Tepper here, actually, he said this morning. He doesn't pay attention to VAR. He puts on value at sleeping at night. He knows his risk levels are good when he can go to bed at night. And the way that I go to bed at night is if I look for a trend, and the trend is still up. And so there's no reason to be anything other than long right now when the $27.60 target has yet to be reached. And then we have to ultimately then extend our goals towards 29.10 moving forward. If this remains in a big upswing, metals look good, Dylan. Copper looks great. I know I come across as a joker, although if you're going to tell me that I'm the sane one, I'm going to make you look like a fool for calling me the sane one. So we have $4.639 here right now, a 3.54% rally. This is also one of the reasons why I look at oil with a bit of cynicism. Copper and oil are not in agreement, but copper is in agreement with most other things. I think that if you are short, Dylan, you've had a really nice run fading the geopolitics here. I'd be very, not that I need the help, but I would be very pensive about holding on to short oil after the last 2 days move.
Yeah, I mean, listen, I'm happy to close mine out just on the maneuver. But can I make a segue in the last 2 minutes of this program as a setup to your political program? Forgive me.
Yes, let's talk about this.
All right, thank you. Finally. What is it? 1, 2, 3, 4, 4, 5, maybe 6 words. The next mayor of New York, Andrew Cuomo. 100% chance. I would say it's 100% chance. 99.9% chance. The biggest political story of the fall will not be who wins a presidential election. It will be that Andrew Cuomo will be the mayor of New York by the end of January. By the time the next president is inaugurated, Andrew Cuomo will be the mayor of New York City.
Ilya, there's no betting market for the next mayor of New York City just quite yet, but I texted you something last night about who the next mayor of New York will be if a betting market goes up. Does it comport with anything Dylan just said here?
Pretty much spot on. I believe as I was frantically exiting my equity shorts, the next thing we talked about was, look at this Eric Adams situation, and your assessment was indeed that Mr. Cuomo is up next. I don't know what to make of that from a practical perspective, but
we will on the prediction trade.
Heyo.
Which is coming up next because overtime is now out of time. We'll be back on Monday, every Monday through Thursday here on Tasty Live, 4 p.m. Eastern, 3 Central, right after last call. Stick around, though. Robert Cahaley of the Trafalgar Group, founder, lead pollster, coming on to talk with myself and Jeff Joseph about the state of the 2024 presidential election, how it's impacting betting markets. Maybe there's some insights for how we can figure out how to make a buck. Join us after a brief break. For Ilya Spivak in San Francisco, Dylan Radigan in Milan, I'm Chris Vecchio. See you on the other side.
Regulation time may have expired, but the conversation is just getting started. This
Welcome back. This is the Prediction Trade. I'm your host, Chris Vecchio, my colleague, Jeff Joseph. Join us for the ride as we talk about the latest twists and turns in politics and political betting markets each week. This is the episode for Thursday, September 26, 2024. We're going to be having on a special guest in a few moments' time. We're ironing out some technical difficulties, but we should have Robert Cahaley, the founder and lead pollster of the Trafalgar Group, on, a Republican polling group, in just a few moments' time. Jeff, before we get to introduce Robert, how are you doing today?
All good. Looking forward to seeing Robert. You know, we had him on about 4 years ago when we had the prediction trade back then. And you know his claim to fame. He was the only pollster who correctly predicted the battleground state outcomes in 2016, specifically Pennsylvania, Michigan, and Wisconsin. And that set him apart from the polling community, started a big dialogue about polling and what's wrong with polling and how to do polling right. But some subsequent analysis that Real Clear Politics did showed him as the most successful pollster in terms of margin of error, with a 2.45 rating, which was at the top of their charts in an independent analysis that Real Clear did. So we're looking forward to having Robert on because he's kind of an outlier in his polling, and outliers are essentially what we look for in the prediction trade to try to identify pockets of opportunity in the markets. So we'll see if we can get that worked out and have him on shortly.
Well, it looks like he just flashed in, and he's going to pop back in a quick moment here. Before we get there, of course, Jeff, this has been another interesting week in politics. Betting markets are tightening up. We can go back to the screens here, gentlemen in the production studio. 50 to 49, Harris over Trump right now. A little bit different than what you're seeing in predicted, of course. If you look at the differences in the market, the presidential prediction, a little bit of a wider margin. In fact, that's not the right one. This is 56 cents to 48, but still a further tightening within that gap. Ultimately, some of the polls in recent days have perhaps given a more mixed picture of the race. Harris has a bit of a lead in some of the battlegrounds, but they're all within the margins of error.
That's right.
Jeff, you and I have frequently talked about, when looking at predicted at least, that there's probably a ceiling for either candidate right around 60 cents. Is this the start of the fade away from that 60-cent ceiling?
Well, we got close to it. Harris was up to 58, and that's exactly how you and I have been calling this. I think you could expect at this point that those numbers are going to tighten more, and that, you know, someone looking to pick up 3 or 4 cents might buy nose on Harris at 44 right now and expect that to migrate a little bit more to the mean, somewhere closer to 49 or 50. That's the only incremental trading opportunities there are right now. I think what's more interesting, perhaps, is looking over at the electoral college markets. If you could pull that up for a second, because that's where you're going to start to see the most activity going forward. That's over on predicted, and that's what you had up earlier. I currently have positions in 2 tranches in that market. If you can go back to that main page, and that was the if you can, there we go. So that would be looking at the 15 to 34 tranche. I bought the GOP 15 to 34 at 7 cents. I bought the Dem 15 to 34 at 8 cents. I've got a penny profit, that's all. But you're going to, expecting a tight outcome that, based on my own calculations of the Electoral College, and particularly looking at the impact of what happens if Pennsylvania goes either way, 15 to 34 electoral votes as a swing margin is where I think the sweet spot is. But a more prudent approach would be to buy the adjacent tranches as well, 15 to 34, 5 to 14, and 35 to 64 on both sides. We approach this pretty agnostically. We're not approaching prediction market trading ideologically. So either one of those 2 outcomes would have a nice payoff. They're both in the 10 to 11 to 1 range right now, and I think that's where the value is in these tranches, because you'll start to see a tightening here as well. If you were to add up all the total costs here, it comes out to about 130, whereas it really should be 100%, right? Not 130%, which means this is a very inefficient market right now, and that's where the opportunities are on predicted right now to expect this to tighten. The other commentary would be back to the markets over on Polymarket, where you acknowledge that it's much tighter. You're looking at a 1-point spread right now between Harris still in the lead and Trump. Because that market is vastly more liquid than predicted's market, with materially more dollars invested than the predicted market. Some estimate is close to $1 billion have been spent on this outcome on Polymarket. That's the market that's more meaningful. The more liquid market is more meaningful, and that should be the how tight this race actually looks to be right now.
Well, it appears that we're going to be trying to get him in, and it looks like we got Mr. Robert Kahalian from the Trafalgar. Yes, yes, we can.
How you doing?
I'm doing well.
Can you see me?
Well, Robert,
Okay, we can hear you.
We've got voice right now. This is Jeff Joseph. It's been 4 years, I think, since we talked, and it was in front of the last election. So it's great to have you back on with us. I'm sorry about the technical issues that kept us apart, but there he is. Nice to see you. How are you?
Yes, sir. How you doing?
Good. Well, we'll cut right to the chase because we have limited time with you now. Well, I'll let you kick off, Chris. I know you had a question queued up for him.
Robert, it's great to meet you. It's great to have you on the prediction trade. Sorry for working through those technical issues, but we have our time with you, so we're going to use it as best we can. You first appeared on the scene back in 2016. Your first public polls were released, and you were one of the pollsters who had Trump winning that race. Other groups, even Nate Silver has pointed out that your polling errors have been fairly tight. You are a reliable pollster. So what have you seen change from 2016 now? And more importantly, has the polling overall become more or less reliable when we start to think about betting markets?
Well, when we look at the difference between 2016 and 2020, it really was a matter of just, a few, literally half a point in a couple of states. But that I'm not saying that to say they did a good job in 16. I'm saying that they were almost as bad, if not worse, in 2020 on error rate. I mean, the fact is you had all the major, TV networks and cable stations. I mean, their error rate was over 5. I mean, it was terrible. I mean, we had the number one error rate besides a group that did I think they did like 8 polls and we did like 20. But, and our error rate was below 2.5. And so they were really off in 2020. They were kind of predicting a Biden landslide that just didn't happen. I mean, they were predicting big victories in a lot of those swing states, and they didn't materialize.
To jump in there real quick for context, I believe some of the final polls for Pennsylvania from some of the news agencies had Biden +8, +10 in Pennsylvania when the actual margins were right around a point.
Right. And Wisconsin, for example, which we called exactly to the 10th of a point, you had news organizations saying it was going to be a 10-point margin, and we said it was going to be a half-point margin for Biden. So it was just, they were really wrong again as far as the error rate. They were just saved by the fact that they got the winner right, but that it wasn't really a success for the polling industry. And so I'm not sure they've learned a lot about what I would call like a Trump era turnout. It's actually very different in the years that he's on the ballot than even the other years. I mean, he has an effect, but it certainly is a little different when you look at the presidential compared to any other elections.
Well, we have short time with you, so I think we want to cut to the chase. Let's talk about, focused on the battleground states right now. And well, first of all, let me back up. Chris and I have been discussing the premise that Pennsylvania, this is not new analysis, but that the winner will win Pennsylvania. Is that the way you're seeing it right now? Do you see a reasonable path to victory in the Electoral College without Pennsylvania? Or is Pennsylvania most likely going to be the keystone state?
I would say the winner has to win North Carolina. Because if you win North Carolina, let me restate that. There's no Trump victory without winning North Carolina, and there's no Harris victory without winning Pennsylvania.
There's no Trump victory without North Carolina. There's no Harris victory without Pennsylvania. North Carolina, of course, is 16 electoral votes. Pennsylvania is 19. In your most recent poll, which your office shared with us a moment ago, in North Carolina, you have Trump up by 2.4%, 48.4 to 46. We've seen other recent North Carolina polling by your peers that suggests an opposite spread. So what is it that you're doing differently, and what do you think is the reason you're seeing a different result here that is favorable for Trump in North Carolina.
Well, I'm trying to remember what Emerson had, but I feel like Emerson was in line with what we said. But I'm not looking at it right now, so maybe not. But most of the new polling I've seen in North Carolina does show it back moving toward Trump. So I can say that one of the things that may very well be different is that we've been polling North Carolina a long time, even before we were on the national scene. There's nothing, I started doing politics in South Carolina, so doing North Carolina races isn't really new to me. And there's a lot of strength in North Carolina, especially in eastern North Carolina, that I think is underestimated. Let's look at 2022. I mean, it was supposedly a bad year everywhere, but in 2022, the Republicans, one of the Senate seats they did win that was open, and the North Carolina House and Senate expanded their majorities larger. So that was the new census and new data. So I think we're probably more in line with what's going to happen in North Carolina, as we have been in years past.
If Trump is to succeed in North Carolina, what segment of the voting population there will be most responsible for that victory? Will it be the shift apparently in Hispanic voting, Hispanic and Latino voting? Would it be the shift among the African American community that's been noted? Where do you think, what's going to most materially move the needle in Trump's favor if he were to succeed in North Carolina?
I'd say both, the Hispanic and the Black votes certainly are going to be better for him than they have been in years past, and certainly kind of record setting for any Republican in the modern era. But what I would also say is there are going to be voters in eastern North Carolina who don't usually vote, who haven't voted since 2020, who come back. And the other group, and this is one of those, you be careful what you ask for, you might get it. There's been a huge effort on these campuses to register young people, the Gen Zs. And Gen Z males, they probably wish they had registered them, because I think they're going to break in favor of Trump to the point, again, that they might wish they hadn't registered them to vote.
Gen Z males are definitely going towards Trump. And it's one of these understandings of politics that Democrats are going to win certain demographics, Republicans will win other demographics handily. And so shifting along margins within those demographics can actually make a material difference when it comes to turnout. When we talk about these polling numbers, though, Robert, we see the national polls, and it's always, or typically in recent years, giving the Democrats a more favorable spread. Part of the common understanding of that is because California is just so darn big, and it gives Democrats such an advantage that maybe you got to shave off 2.5 to even 3 points from national polls just to account for California's influence. Is there a line in the sand that you look for, a number for the national polling average that informs you if one candidate or the other has a greater chance of winning? Which is to say, does Kamala need to have like a 3 or 5 point spread above Trump to be the winner? Or if it's within 3 to 5 points, Trump's more likely to be the winner?
Yeah, I would say that I'd go with that 3 marker, that, she has to be 3, probably 3.5, just to make sure, because you also have to consider the enthusiasm gap in some of the states that matter. Like,
right.
When we measure that, when you look at the entire nation, you're looking at 43 states who are not being inundated with TV ads, and 7 that are. So those are 2, and all those ads drive up turnout. So you have to consider that those states have a disproportionate weight to them in the overall national turnout beyond what that 7% would represent normally.
Where are you?
Go ahead, Jeff.
Where are you seeing the biggest surprise in your polling that you're not seeing reflected in other polling?
Well, and we say other, I mean, there's certainly polling groups that I have a lot of respect for. Obviously, my fellow co-host of the Polling Plus podcast, Matt Towery, and Insider Advantage, a lot of his stuff seems to be very in line with what we're doing. And then, Emerson seems to be very in line with what we're doing in most cases, just a few points away. But I do see, I would say North Carolina, and the other I would say is Pennsylvania. We feel stronger and stronger that Pennsylvania is moving. Is that there's actually begun a little possible separation there. When we measure the Senate race and the state, and the fact that that is a competitive Senate race tells you a lot about where those people are, and it also tells you, we talk about hidden vote and the social desirability bias. If that race is tied, or even better, that means that there's people who are saying undecided or saying Harris that are probably voting for Trump in the other race. So that's a low watermark for Republicans that's probably going to be higher in the presidential. So I would tell you, I think Pennsylvania is, we're feeling like it's going to be stronger for Trump. The last time it was polled, Matt Towery was doing it, and I was polling Georgia the same night of Trump's second attempted assassination. And we both saw in that last day of polling a significant uptick for Trump in that afternoon and evening once the news broke. And so a lot of the polls that are dragging that average down in a lot of these states were started before that, and very little post-Trump second assassination attempt numbers. And so I think that's why the averages don't reflect where it really is, because there was a little bit of a change there.
Robert, you mentioned the second assassination attempt, and that's one of a number of events that we've seen, obviously, over the course of this race have really presented a new twist and turn. It feels like there's not many significant events outside of perhaps an October surprise that could come down the pipeline that represent a potential turning point. Maybe the Walz-Vance debate that we have this coming Monday or Tuesday, October 1st. Do you see that as something that's going to be a needle mover here, or something more substantive is going to have to appear out of left field for voters?
Well, I think it really depends on what happens. I mean, if somebody hits a real knockout punch, quite possibly that thing could have a huge impact. Just either one of them just kind of really lands a good zinger, it could make a difference. Otherwise, I think that right now, one of the things that we see in all the polls is that people know who Trump is and they don't know who she is. So it's always like when we talk about, in a race, we say, all right, generic candidate versus Jones. And generic tends to win because there's lots of negative stuff known about Jones, but generic is undefined. Well, she really she gets the benefit of the doubt until she's defined. So the more she gets defined, she's likely not going up. And so I think that the more she is defined, the worse for her, because there's nothing no revelation about Trump that's going to go, oh, I would have never thought that. That's just not going to happen.
As a New Yorker, he's been in the news my entire life. So like, oh, when Trump does this, well, my dad's from the same neighborhood from him in Queens. My grandpa used to play golf with Fred Trump. So like, this is nothing can surprise me, right? I'm no one's shocked. So one more question here, Jeff, before I pass this over to you. Do you find that political betting markets influence public perception of campaigns? Is this a tail wagging the dog situation at all?
No, I don't know that they influence it. I think that it's one of those things that's kind of something that when you think your candidate's winning and the betting markets say it, you throw it out there. But when you think your candidate's winning and the betting markets don't say it, you just don't talk about it. But what I will tell you, the one thing I like about the betting markets is the betting markets are not full of nonsense, because these are people with their money on the line. And so all the BS polls and fluff and all the stuff that networks do with a thumb on the scale to try to make, somebody look good, kind of pump and dump stuff, they don't fall for it. And so these are people who have done a lot of studying and really understand like which polls they should ignore, which ones they should pay attention to. And that's why I think that they're just like a more educated group of people. And again, when you have your money on the line, you take it more seriously.
We're down to the wire with time. If you were forced to wager, not based on your ideology or preference, but based on the numbers that you see in your polling business, who is most likely to win Pennsylvania if the vote was today, and who is most likely to win North Carolina if the vote was today?
I would say if the vote was today, no question in my mind, Trump wins. Pennsylvania is still tight. I think it is trending. Oh, no, if the vote was today. All right, if the vote was today, I think Trump would win it. But I don't know that that will continue. So if you ask me,
is that from winning Pennsylvania and North Carolina? Is that the way?
As of today.
As of
today. I think in a month, in a week, Trump's going to win North Carolina, and I don't know about Pennsylvania.
And without Pennsylvania, Trump's path to victory with North Carolina makes Arizona and Nevada a must. Is that correct?
I think it puts a lot of pressure on Michigan and Wisconsin because, frankly, I've just got to be honest. I have had my butt kicked on Nevada 3 elections in a row. It's the only state I've ever gotten wrong 3 times. I will not predict Republicans are going to win in Nevada. I just won't do it.
And you have Harris ahead by 1.8% in Nevada right now. That's on your most recent
I'm
poll.
telling you, that effort that the unions do of getting those voters out is unbelievable. And usually they do quite a good job on the Saturday before the election, which makes it very hard to capture in polls. But like I said, I'm not calling Nevada red, even if I'm wrong, because my butt's been kicked 3 times on that one.
Jeff, I get that. There are some products to trade, and if I take a bunch of losers on the nose, that's it. Doesn't matter what it's doing next. I'm not trading that market.
Got to know when to fold them.
Exactly.
Yeah.
That's right.
Jeff, we have run out of time here on the prediction trade. Robert, it was a pleasure to meet you. We really appreciate your time helping inform our audience about how the state of the race is shaping up here. Hopefully we'll have you back again in the future. We didn't even get to talk about the craziness that is the New York City mayoral race now, but that's I don't know if we want to touch that here. But for myself and Jeff Joseph,
I don't know.
thank you.
I'm not a big fan of Turkish Airlines first class, so I don't even understand what he's getting.
If you read the indictment, some of it's pretty funny because it's like, hey, are we going to do some crime here? And everyone's like, yeah, don't worry about it. Just carry on. Crime as usual. Just delete the text messages. In any event, for Robert, no, that's not how it works. For Robert Cahaley, for Jeff Joseph, and myself, Chris Vecchio, this has been the Prediction Trade. Remember, trade smartly, trust the math, and remember, come back next week for the next edition of the Prediction Trade.
Thank you.
China finally embraces stimulus and Wall Street shrugs for some strange reason. So if they can't make hay of that, what are they going to do if U.S. inflation goes back up? That's the question we are asking ourselves here as a very eventful, very dense macro week starts to wrap up. And we start to consider what we are looking at here exactly. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we are going to unpack all of it here as things heat up finally with a little bit of macro data risk on top of the otherwise dense news flow, and see if we can't make sense of this very convoluted, very tricky situation that presents here. And we begin with the news overnight out of China. We, of course, had earlier this week an announcement of monetary stimulus, yet another bit of monetary stimulus from the People's Bank of China. And we shrugged here at Macro Money. If you're watching this as a recording on YouTube, I'll link the episode earlier this week. You'll see it just above me there. And we were joined in our shrugging, as it were, by most market observers, it would seem, because, of course, China has attempted monetary stimulus for a long, long time, and it hasn't really worked. Overnight, we have seen the announcement that Chinese President Xi Jinping and a core group of Politburo officials are prepared to embrace fiscal policy support. They're prepared to do some spending out of the government's coffers to revive the economy. And needless to say, this is a massive rally then that happens in Chinese stocks that then pulls with it a whole host of markets. Markets in Asia Pacific rally, markets in Europe rally. This, of course, is China's CSI 300 index, their equivalent of the S&P 500 or so. And we can see here absolutely blistering gains of over 4% today. But then the Wall Street cash equity open happens. And the response is a bit strange. So here is again that ETF that is tracking China's CSI 300 right here. And I purposefully looked at US ETFs here rather than China's index and the US index because the timelines here are going to line up. These are both instruments listed on US markets. And we can see here massive spike in Chinese markets, seemingly the same thing from overall US equities as they pick up from the global lead, and then we erase more than half of the advance and limp into the close. This is a strange response because the news out of China really is, by all accounts, positive for risk sentiment. And we'll review very quickly why from our conversation earlier in the week. The global economy is basically powered by three core growth engines: the US, the Eurozone, and China. The remaining 50% of global GDP is made up of countries that are, for the most part, vendors that depend on demand from the former three. So think Canada and Mexico for the US, think Central Europe, Nordic Europe, Switzerland, UK for the Eurozone, Southeast Asia, Australia, New Zealand, the commodity exporting parts of Africa and Latin America for China. And so Russia for China, of course, as well. And so you have most of the world powered directly or indirectly by these three economies. And the lay of the land isn't looking very rosy. These are composite PMI numbers from S&P Global in the case of the US and the Eurozone, and from officialdom in China, CFLP, in that case. And we can see here that whereas the US has seen steady growth since about May of this year, that's the green line right there, and we can see that in May, US growth jumped and hit the highest level in a year back from May 2023. Just a reminder, of course, these numbers operate around a scale where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So the key takeaway here is U.S. economic growth ramped up in May and hit the fastest rate in a year and has held there. Numbers are earlier this week confirmed. We just did it again in September. Meanwhile, the situation in Europe and the expected situation in China over the same period look abysmal. Europe is shrinking, and China, having hit standstill in August, is expected to be shrinking when its numbers come out next week. That's obviously not good news because it leaves you with just one major engine of global growth working as you might want it to, and the other two misfiring. So when you get the announcement of stimulus from China, that maybe could revive the second largest economy in the world and one of these key engines, well, that's good news. We got monetary stimulus earlier in the week, and as we mentioned, that was met with shrugs because what China's economy needed was demand. Making money cheaper is an inducement, but it doesn't create demand. It encourages people to borrow, but if they don't want to, they're not going to. And what we've seen in China is bank accounts deposits have hit a record high. The pace of inflation from state-sponsored and private sector enterprises has ground to a halt. We can see here for the past 5 quarters, the economy is without demand completely, it would seem, because real GDP growth is outpacing nominal GDP growth, giving us this deflationary economy-wide situation where the price of things at an economy-wide level is falling, and falling by a significant margin, on average close to 1 percentage point of GDP growth, which is a situation that basically says everything is on discount because there is no demand, and so the price for all of the economy's output has to be falling just to clear inventories and try to find some semblance of demand. This is why monetary easing hasn't worked. Without demand, people just stash the cheap money under the mattress and nothing happens. So what has occurred overnight here is China has basically said, okay, we are prepared to put demand through the system by government spending. The same thing that governments did, for example, in Europe and the US during the COVID-19 pandemic, and what really held them together when essentially everything shut down. So this is huge news. It is a very significant head change for Xi Jinping and the sort of core officialdom actually running China, because they've been very resistant to fiscal stimulus so far. They did lots of speeches saying we don't want frivolous growth, we want quality growth, and we don't want to just juice the economy with spending. Well, the economy has needed somebody to be spending something for 5 consecutive quarters now, and the private sector isn't doing it. And neither are regional governments, and neither are businesses. What's needed to happen is somebody has had to generate demand. And now it looks like we're finally going to embrace that. Now, the announcement was thin on details, but Reuters circulated some whisper numbers suggesting the Ministry of Finance was getting ready to issue a special bond this year to the tune of 2 trillion yuan, or 285 or so billion US dollars at current exchange rates. And so seemingly a sizable number if it's real. But the much more important thing here is the head change at the top in China. So really, this is seemingly straightforward risk-on news. If you can remedy this situation such that if the U.S. were to stall, there would be some amount of safety net, as opposed to the current situation where there isn't one, that would significantly diminish global recession risk and really ought to be very good news for markets. So this response here is a bit of a head scratcher. And it comes at a time when we get the first real bit of critical U.S. economic data about to cross the wires. We are going to get the Fed's favored U.S. PCE measure of inflation. And this is the benchmark that the Fed likes to look at. CPI, of course, is already out for the month of September, and we've already had the producer price index out as well. So it's relatively straightforward to figure out what these numbers are going to be once those things are there. And that means that we're going to register pretty close to forecasts most of the time on this index. But what does that mean to register close to forecast? The headline is seen cooling to 2.3% year on year. That would be the lowest since February 2021. We know that. But the core is where the action is, because, of course, this is where the central bank has agency to do something. Housing is pretty much locked up until the rate cut cycle really takes full effect and filters through into the economy, so that mortgage rates decline enough for sellers that have been holding off on wanting to refinance to something new actually sell. That is going to, one would think, generate inventory, which then pushes prices down, which attracts buyers, and ultimately unsticks the bit of inflation that's trapped in housing. But the other big thing here is, of course, core services. The Fed can't do much about global food and energy costs. Those are determined on global markets. But it's this core services bit that's important. And when you see that going up, as captured in the core year-on-year rate, that's a little bit eye-catching. As a matter of fact, the rise that is expected here would be the highest reading for core inflation in 4 months, and the biggest 1 month rise in this year-on-year rate since September of 2022. So this is an interesting step in the wrong direction here if you're the Federal Reserve and you've locked in for a whole host of rate cuts on the idea that there is already a clear pathway toward your 2% inflation target, and you're starting to get some indications from the labor market that maybe you need to act. And of course, the Fed has been signaling this since July. And as of last week, they embarked on a rate cut cycle with a 50 basis point cut. Not only did they do that, which of course the markets wanted to see, they wanted to see the larger cut, but the Fed basically endorsed all of the market's own prognostications. So we can see here the markets expect a further 50 basis points in cuts this year. That's another 50 basis points on top of the 50 that they already did last week, for 100 basis points this year, exactly in line with expectations for what Fed funds futures had before the Fed policy announcement. The Fed also projecting another 100 basis points for next year. Markets were already there, and even a little bit more dovish, but very slightly so. And so you can see that through all of this, basically going back to the lows in August, the outlook for Fed policy has hardly moved. Because really what the Fed has done is endorsed what the markets already had there. And that is a very expansive rate cut cycle to the tune of another 175 basis points if you ask the markets, and another 150 if you ask the Fed. So as the markets have digested this, and they see an economy which, as we just saw, is doing reasonably well. The PMI numbers this week still showing anemic manufacturing, but the buoyant service sector is holding overall growth, again, for a fourth consecutive month, near this yearly high we set in May. And the growth nowcast from the Atlanta Fed that markets pay very close attention to is running at a hot 3% for the third quarter, even as we get final revised numbers for the second quarter earlier today that shift us into the direction of still higher growth. Those numbers revised to show that we grew at 3% in the second quarter as well, which was, of course, an upside adjustment. We get the sense that we're looking at a U.S. economy that is generally well supported. And so the markets looked at this vast amount of stimulus being offered and said, well, this is going to be inflationary. And so what we've seen is measures of inflation in the bond market, break-even rates. We've seen those go up. They're at this point at the highest levels since June for the 5-year and the 10-year. And of course, market measures of inflation expectations have behaved accordingly. The yield curve has steepened with long end rates rising, mainly because of expectations for higher rates in the future in response to this inflation. Gold is surging. It is a typical beneficiary of rising inflation expectations, not surprising, as a kind of alternative store of value to paper currency. And of course, in the wake of falling interest rate expectations. So we have the market saying, okay, the economy is doing fine. We're going to get all this easing. It's going to boost inflation. And then the PCE number is coming as though to say, yeah, and inflation may already be starting to perk up before all of this even comes to a head. That makes for a serious question about not necessarily whether the Fed is going to cut again in November and December. That much seems pretty much locked in, but whether the Fed really has the bandwidth to cut with the kind of aggression that the markets want to see next year. And incidentally, with the kind of aggression that the Fed has all but fully endorsed. Now, we see here that U.S. economic data has marked something of a turn relative to expectations. It is still somewhat tending to underperform relative to forecast, but we can clearly see an upshift here. So there's clearly been a level of revising of benchmark expectations at the same time that we've started to get these chipper adjustments in the data. We just mentioned the GDP revision. Jobless claims also came in on the strong side. And there's this sense that maybe U.S. economic data is starting to mend, at least relative to expectations. So we're relatively close, it seems, to outcomes that are tending at least to meet forecasts, and maybe even in the realm of expecting the PCE could surprise a bit higher, which would be consistent with leading indications here. This is the ISM non-manufacturing index, services sector, essentially, index of prices. And we can see it tends to lead the PCE by about 2 months or so at the big inflection points here. And if that indication holds here, then we're in a period of somewhat sideways consolidation, and more of that with a little bit of an uptick bias seems to be ahead. So we're lining up perhaps for a PCE number that says to markets, yeah, maybe the Fed isn't going to do quite this much easing. Maybe we have a bunch of gasoline, inflationary gasoline, being poured on the economy at the moment. Here's your confirmation that it is already something that's materializing in the data. The Fed is probably less likely to really rain rate cuts on everyone next year in that kind of an environment with inflation expectations rising. They still want to hit that 2% number and to hit it before long. So as we look at how stocks behave here with unadulterated good news out of China and their inability to make good on it, they appear very vulnerable, and risk appetite appears quite shaky as we get another source of potential concern from a less generous Fed rate cut tally. And that, of course, raises an important question. If the markets are so soggy in their risk-taking that China cannot cheer them in a lasting way, what happens if the Fed outlook disappoints? And that, of course, makes for a palpable risk as we enter the final hours of the trading week. That is Macro Money for today. Thanks very much for joining. We are here Monday through Thursday, right after overtime, a show I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and what may happen thereafter. I'm back with Chris for Futures Power Hour tomorrow. On with Victor Jones for The Price of Truth on Wednesday. On with Victor and Tom for First Call on Sundays. Writing for the News and Insights portion of tastylive.com. And commenting on the platform formerly known as Twitter, at Ilias Pivac. Thanks very much for joining. Macro Money's back next week.
With me today is my regular co-host on Bad Trader, is Luis. Luis, thanks so much for joining me. How you doing today?
Awesome, Julia. Thank you for having me here. Excited to be here with you and a lot to talk to about the markets today.
Yep. No, there's a whole lot to talk about. Yeah, hopefully he's staying dry. We'll see how he does next week. So yeah, thank you for joining me here today. Yeah, we had it was an interesting day in the market, and then we also had a very fun day, just like on Bad Trader. We do trivia every Thursday, and we had 3 viewer suggested categories. And we're gonna bring some of those questions here today. So that was actually a really good time. And yeah, otherwise in the market is certainly marketing. Again, we're kind of seeing the indices close pretty flat. How are we feeling about today? I know we already talked about it a bunch, but if you want to just share your thoughts on some of the major points we talked about.
Well, we're actually closing, Julia, for the S&P, the 42nd straight record high this year. I was surprised we actually closed green. At one moment, I think they actually they were a little bit red. When you and I were actually streaming, they were basically flat, but still below from the highs of today. I was very surprised when the Nasdaq was up 1.5% just at the open, but ended up a little bit weaker, but still with record highs. So I don't know about you, Julia, but looks like maybe the Nasdaq might want to actually push to all-time highs. The SPY is already there. Also, the Dow Jones already at all-time highs. But the Nasdaq still looking strong, and even with today's SMCI, wasn't able to take down Nvidia.
It was or was not? Because when we were streaming earlier today, it wasn't. No, actually, no. Nvidia just ever so slightly closed green today, and we talked about Mind Power. It's awesome to see you. Thank you for joining us. It was really interesting to see that because we talked quite a bit about these sort of like mutual dependencies that these two companies have on each other. SMCI, a big part of their business, or I'd say like most of their business, from what it seems, is to build these sort of like customized server stacks that are optimized for NVIDIA technology, depending on what the specific customer's sort of needs are. And then they also have like agreements outside of that sort of like standard business process. So that is bad news bears for NVIDIA, seeing some of this news in SMCI. However, it was not reflected in their stock price, which I'm honestly really surprised about. But yeah, no, my AMD position, AMD was a very big mover today as well. That's something I did have a position in. It looks like it sold off a tiny bit since the open from its peak, kind of like, where we opened, but it was a very big move. So my position was not super happy about that. But yeah, again, with this news about SMCI, I mean, it halted, I think it was only twice, right?
I saw it was actually halted 3 times.
Was it 3 times? Did it already go up to 3 times? Yeah.
Yeah, ended up being 3 times, but 12% down. Let's see what happens, because they were supposed to give out their 10K filing on August 30, so they're almost 1 month away. So let's see what happens with that. The Nasdaq is also not happy with that. So it seems like Hidden Moon Research is not that wrong with the report they actually launched about a month ago as well on Twitter about accounting fraud, because that's what the DOJ is actually saying. The probe they actually launched today, according to the Wall Street Journal, that there's supposedly some accounting, not fraud, but some problems there with SMCI, and let's see what happens with that probe.
Yeah, that's not great. But certainly something interesting to see. Really big move in SMCI today, down $55, but it did recover a little bit by the end of the day compared to sort of like, where it opened and how it moved right on the open. So I don't know. keeping an eye on this, especially as like now we're starting to kind of like roll back into earnings for some of these semiconductor stocks. I know Nvidia is going to be more towards the tail end of that. Let me see. Nvidia, I believe, is outside of the 50-day cycle. So that is, yeah, it's November 19th is when they're going to be reporting. But SMCI, when are they reporting? They're reporting November 6th. So there's still a little bit of time. Nice little spike in here as well. SMH, let's see how that was moving today. It was actually green today. Up $7 dues, which I'm assuming is mostly driven by Micron, which was up $14 after a very, very promising earnings report. If you wanted to elaborate on that a little bit.
Yeah, huge move there on Micron. I wasn't really looking into that stock very much, honestly. But I think it actually went double from the expected move on Micron. So really good push. That might actually have been one of the responsibles for the futures to be up so much at night yesterday. But today we also got the report from Costco. Costco basically flat for today's report.
Costco, I saw that it was down like a little bit, but usually the donks or the stonks are a lot more are a lot more dramatic than that. So yeah, Costco just reported and it looks like down a couple bucks, but really not as much as I was expecting. This one has been just like an absolute beast throughout the year. It's been consistently in the S&P like one of the best, or one of, I don't want to say best because there's, you know, asterisk on that word, but one of the strongest performers as a percentage, but also from a risk adjusted reward perspective. So looking at like Sharpe ratio, for example, Costco's been very strong. So I think, I mean, the open might have more to tell us, I guess, but surprised to see such a muted move following earnings.
It was a little bit of a mixed results. The revenue, they missed it by $200 million, 79.7 billion in revenue versus a 79.7, sorry, in revenue actual versus the expected of 79.9. Adjusted earnings per share, actually they beat there, 5.29 versus a 5.07 expected. And I was seeing the report a little bit there. I don't know if you saw the video, but they opened a Costco in Okinawa. Now they have 35 Costcos in Japan, but the videos there when they opened, it was crazy how people were actually piling there. I saw the sushi in the Costco. Oh my God, made my mouth water.
Is it $1.50?
The $1.50. No, I don't know if it's $1.50, but I'm expecting it has to be. Here in Mexico, we still have the very cheap hot dog, but now they have around 891 stores, warehouses around the world, and seems like they're really bullish in Japan from what I was reading on the report. So a little bit mixed. That's why maybe not moving so much right now. Let's see tomorrow what happens with Costco.
Yeah, interested to see what's happening on, or what's going to happen on the open. Chinese stocks are continuing to do very well on my watch list. We have BABA up another 10% today. PDD up another 13%. FXI, so the like, you know, relatively diversified large cap Chinese sector ETF up almost 8%. So yeah, very, very big move again, 2 days in a row for some of these Chinese stocks.
Yeah, and today David Tepper actually came in very bullish on CNBC. He said, buy everything. It's very weird to hear him actually give an interview on TV, but he's a CEO and founder of Appaloosa hedge fund. So he's a really renowned investor in Wall Street, and he being so bullish overall in China, I think it's a double bullish sign after what the People Bank of China did on Monday.
Yeah, I mean, it's really interesting to see it. I kind of want to, give it a little bit more time to see if I buy it, quite literally. Because even though we've had a really strong rally, it's still like so far off of like Alibaba's highs, but also like a lot of other Chinese names from the highs that they had, a couple of years back now. So it's just it's a little bit of a blip. But yeah, we talked about this earlier today about how it seems that a lot of the stock price action seems to be more so driven by investor considerations around like the geopolitical conditions, political conditions around like U.S. China relations and CCP sort of like larger or broader economic decisions, as opposed to sometimes what the company is actually doing, or, like the actions that they're taking or the programs that they're creating. So I guess we'll have to see. This is another kind of instance of that. But yeah, I've been waiting for Chinese stocks to finally rally again, and maybe this will continue.
Yeah, I agree. We missed the rally. I think you and I were actually talking about Chinese stocks for a few weeks and never pulled the trigger so much on being bullish there. I just hope it's not too late to do that.
I mean, they got a long way to go. They've been, again, beat up for a very long time, so they got a long way to go. And it seems like, I mean, yeah, I would not be surprised if a lot of other investors were kind of feeling the same way, kind of giving time a little bit more time to develop, because we even saw this sort of, yeah, like earlier in 2023, even in periods throughout 2024 when we had, you know, like kind of nice promising rallies off of some seemingly good news that just kind of didn't go anywhere. So it's going to have to take a little bit more, I guess, for this to be, for me to buy it, I guess. But yeah, the little pop would have been nice to sort of capitalize on, I guess.
True.
But otherwise, yeah, we had Micron that did really well today. Chinese names are doing very well. CEG having a little bit of reversal. That's been, I mean, but that being said, like this popped like a lot. So that calling this as a reversal is like kind of not it's an accurate description. CEG doing very well. What else? Let's take another look at the market real quick, and sort of how things are moving before we hop into some of our slides. We got airlines actually did very well today. Not very well, but like American Airline, well, actually that is pretty well. 7.2% is looks like how the day ended. Up 6% for Delta. What else is going on in here? Yeah, airlines are doing kind of well today. I wonder what happened. What happened? Is there news about airlines?
Yeah, I was wondering the same. I don't know, maybe it has to be related with oil prices going down a little bit, or why are they up so much?
Yeah, potentially. I was looking through, because we had again such like a strong open, was looking through sort of like across the different sectors in the S&P, sort of how things were moving. It was like energy was the one that got hit the hardest today, and XOP was one. So a position on finally got filled, and this one was down pre-market. It looks like it kind of stayed down a little bit. So yeah, some of the energy products, it seems like, were some of the few that were down today, in terms of, yeah, just kind of broad sector trends. So that was one thing that we noticed and talked about. To the downside, obviously, like SMCI is bad news bears, but 12%. It was at 16% earlier today.
Yeah, it recovered a little bit, and it brought down a little bit the Nasdaq with it, but actually ended up green. So seems I'm just surprised whoever was who had the decision to add SMCI to the S&P 500, more down than 70% after it got added to the S&P.
Yeah, and yet the S&P is still just smashing all-time highs these days. Let's see if the Russell finally catches up. We also have VST Vistra, so one of our sleeper builds was actually down 4% today. That being said, I'm not surprised just based on how it's been moving in September.
Yeah, and I think it's the best performing stock year to date, actually overpacing Nvidia as well, and overthrowing Nvidia with the best on the S&P.
Year to date, it's up 200%. Year to date, it's up 200%, while Nvidia is rocking a mere 157%. So it is actually outpacing Nvidia, at least in terms of just like overall growth, which like we've actually kind of seen from a couple of our sleeper builds. Some of them have actually been energy stocks. So VST down a little bit today, but that being said, like I'm not surprised there was a little bit of a correction, is maybe the term I'll use here. Again, how it's been moving throughout September. What else? Yeah, we were talking a bit as well today about some of these like crypto mining companies had pretty nice pops. Bitcoin is over 65 again. Let me just double check the price real quick before we look over at Mara. Yeah, it's over 65. It's like 65.2 right now. And yeah, some of these crypto mining companies, and Mara was the one that we were kind of looking at the most, although I'm not trading it. I got my Beto shares and I'm waiting to see what the dividends are like on those. But yeah, we had a nice little pop today, and some of these other firms. So that was interesting to see.
Yeah, I'm excited with Beto. I was going to say that we went a little bit small in Beto, but
yeah, we got a
it's
little baby
definitely
trades.
helping Bitcoin's move for Beto shares that we have. And we're going to have Starbucks money for Beto dividends once we get them in around 2 weeks.
Don't jinx it. A lot can happen with Beto. Yeah, apparently Beto's dividends rates are 75%, 79%. So Louise and I each bought 20 shares and we're going to see what happens. Not really much of a dividends investor myself, so this will be a nice little experiment, although Louise did a great piece on dividends investing that we'll put on the Bad Trader YouTube channel if y'all want to go check that out. So yeah, I think those are like the big movers and shakers that we were talking about today. We do have some trivia that I'm excited to get into. You want to hop in?
Yeah, me too. Let's hop in, Judith.
Let's do it. Okay, so first things first, we do have an app. We made some sick updates over the last couple of weeks, and we're about to make some very sick updates in the next release. I'll talk more about that next week, but if you want to go download the app, we'd love to have you. For badges, points, stream, and chat, you can find us over in the App Store and the Google Play Store. And then as well, if you're watching over on the Tasty Live website and you want to come throw your answers to trivia in chat, you can find us on the Tasty Live YouTube channel at Tasty Live Show. And Luis does an amazing job of managing our Twitter. So if you want to go check that out, it's at Bad Trader App on X, formerly known as Twitter. I know you got a little bit of news that you wanted to kind of recap. I think we've talked about it a little bit, but if you want to just kind of go through it quick.
Yeah, Yulia, so the record close, the 42nd record close for the S&P 500 today. As of yesterday, it was the 41st. So I was surprised to see that on 2023, we had 0 record close for the S&P. Prior to that, just looking in 2021, 2022, 7 in 2021. So let's see what happens this year, if we can see there more. Seems like banks are very bullish overall. The highest price target for the SPX actually 6,100 for the end of the year. And the lowest one from JP Morgan, 4,200. Obviously, they missed that. That's why his analysts actually quit it. And also some price from August 5th versus today from the Max 7, some of the Max 7, Julia. Amazing how they actually recovered, how the market has recovered since August 5th, the worst day so far for the year. Look at NVIDIA, lows of 90 and now high of 24. I actually remember buying NVIDIA shares on Friday prior to the August 5th Monday, and ended up closing with a little bit of a loss, but I'm very surprised, especially with Meta. Seems like Meta's going to be the best performer for the week on the Max 7, along with Tesla as well. But yeah, some just cool data to see from the Max 7 stocks.
2021, I'm not looking, I mean, this is obviously relative to a specific metric, so not looking at overall growth, but is like 2021, according to this, like at least like the second strongest year since 1929? As I'm seeing like 95 was a really strong year, at least looking at this, like, you know, surpassing all-time highs, not necessarily looking at a percentage growth, but like 2021, damn, dude. All-time highs. It wasn't just like, it wasn't even just like the COVID recovery, right? Because that was like, that wouldn't have been surpassing all-time highs. It just blew through all-time highs 70 times. That's wild. Holy crap.
This is a bully market for the bears, Julia.
Yeah, bull market for the bears. That's like a third of the year was SPY passing all-time highs. That's crazy. Really interesting stat though. Thanks for showing it. Yeah, we're definitely, the neutral people are feeling it. I'm feeling it a little bit. But super cool stat. Let's go on to the next one.
Also for the top sectors, you and I were also discussing about utilities a little bit on our stream today. They're about to have utilities their best quarter since 2003. Right now, around 16.8% of gain. It's also utilities is the best sector year to date, surpassing the S&P overall with a gain of 27%. So the companies that have provided electricity, water, and gas have been actually the best performers. We just mentioned with Vistra up 200% year to date. So it's actually pretty interesting to see utilities with real estate also being the best one. But utilities, as we mentioned also earlier, they tend to be one of the worst performing sectors after the first rate cut. So they have actually been helped a lot by a lot of demand from electricity, by AI servers and AI, all this energy needed for them. But it's actually looking pretty good for them. I know you mentioned trying to maybe discussing of putting a position in utilities. So I thought it was a cool data to show.
Yeah, that is cool. For trades from the research team this morning, it was between XLU and XOP. I ultimately went with XOP because of the liquidity just seemed a little bit better. But yeah, and then when we were talking on stream later today, Luis brought up the statistic, which is that utilities tend to perform, at least historically, one of the worst sectors, I guess, after a rate cut. So maybe not bullish on utilities, but we're going to have to see. Super interesting stat either way. And then we got one more, I think, before we hop in.
Yep.
Let's do it.
This is the price action of SMCI after the Wall Street Journal report came out from the DOJ probe for them, for the accounting irregularities they actually discussing. So supposedly I was watching in Twitter some big orders, put order flows like around 15 minutes prior the report came in, which was also interesting. So yeah, really big impact that the Wall Street actually report had on SMCI today. I remember being impacted by one of the Wall Street Journal reports. It was, I think, Viking Therapeutics. They falsely said that they were about to be acquired by Novartis Group a few months ago. But I remember that. So taking this with a grain of salt with Wall Street Journal because they've made mistakes also this year. But
good point. You got to be mindful about reporting.
Yes, and to me, it was surprising that we also discussed it, that SMCI is NVIDIA's third largest customer, and basically NVIDIA ended up the day green.
So yeah, interesting to see the decoupling there. Oh man, what a tumble! And this is after it's already been kind of tumbling. But yeah, no, this is a great graphic. I actually really like it. But yeah, I always do want to take reporting with a grain of salt for that very reason. Super cool stats, Luis. Thanks so much for putting it together. Are we ready to get into some trivia?
I'm ready.
Okay. So this is one of our trivia questions. We got three. This is a viewer suggested category. We did it today when we were going through trivia. We do that every Thursday at 12 Central. And so this was it's not one of the questions, but it's one of the themes. I actually rewrote it. So this is called When I Was a Kid. So when I was a kid, we loved watching Columbo and eating Pop Rocks. Led Zeppelin was on every radio and people wouldn't shut up about Watergate. What decade did I grow up in? That's the When I Was a Kid category. So we had a couple questions about that. This is a new one. But when I was a kid, we loved watching Columbo and eating Pop Rocks. Led Zeppelin was on every radio and people wouldn't shut up about Watergate. What decade did I grow up in?
You put it harder, Julia. The only Colombo I know is a bodybuilder that was competing with Arnold Schwarzenegger.
Well, this is
Franco
also
Colombo.
like very unfair to you because this is very American centric trivia. So, but I happen to know this show because my dad was obsessed with it. If that helps, we got Grumpy Mike and we got Bob who also killed trivia today. We got 70s from both of them. Luis, if you want to give an answer.
I'll actually have to piggyback once again. Bob Salas was actually so spot on today that I'll piggyback from him. 70s, also with Grumpy Mike.
From Diesel Dork as well as Grumpy Mike, that was 70s. And it is, in fact, the 1970s is when you would have grown up with Columbo. And I didn't know Pop Rocks was 70s. I was actually very surprised about that. So that was kind of fun. Good job, guys, who got it over in chat. Jay Wright, very close 1980s, but 1970s is what we were kind of aiming for with Watergate a little bit. I'm sure a lot of that bled into the 80s, though. But very good guesses either way. A bunch of people got it. Pop Rocks sounds very 80s. That is super true mind power. But yeah, they're a 70s thing. I kind of knew that or learned that, I guess, when I was putting this together. Okay, and now this is a Julia-defined category, which I'm kind of excited about. Do you want to get into it?
Yes, let's get into it.
Okay, in bad taste, I wanted to do a kooky entrepreneurs section. So mostly ones that were arrested for something usually not great. So this one I was pretty surprised about when I was putting it together. Let's see how we know our kooky entrepreneurs. But this businessman who developed one of the most iconic cars of the 1980s caused his automotive company to file for bankruptcy after being charged with cocaine trafficking, allegedly worth $24 million. If you tell me the name of the entrepreneur or the car, I will take it.
So it went bankrupt in 1980.
I believe it was the 1980s, but the car was really well known from the 1980s. Grumpy Mike might know this one.
I love cars, but I think my old car, classic car knowledge is very rusty.
If you think of, okay, just don't even look at the chat yet. Just okay. Yeah. When you think of the 1980s, if you think of a car, what's the first thing you think of?
I don't really. I'll go with like Mercedes, but
Okay.
I might actually be wrong because they're actually still in business.
This one I don't believe is in business, but I have seen in very rare circumstances this car floating around the streets of Chicago. I don't know how because it seems you can peek at chat now. I think a bunch of people got it.
Let's see it. The DeLorean. The DeLorean.
The DeLorean from Grumpy Mike, Back to the Future car guy, but from Bob, DeLorean from Absolute Beginner. Thanks for joining us, Diesel Dork DeLorean.
I never seen one in Mexico.
Delirium from D-Chat, that's awesome. You've never seen, well, it's really rare to see them these days. But I've actually seen like one or two on the road in the wild. First, actually, Bob, that's a very good point. The first 1980s car, I think of as Knight Rider car. Yeah, Knight Rider is what I was very tempted to use for the television show for the 80s. But that was huge. But I guess maybe the car I think of as a DeLorean. But Luis, do you want to go ahead and give your guess?
Yeah, I'll go with the DeLorean. I've never watched the movie or even seen one in person in Mexico.
You've never seen Back to the Future? Okay, this is a little unfair because again, very American media centric, but it is in fact John DeLorean, apparently allegedly trafficking cocaine, and he was dealing with the case, which kind of caused his company apparently to file for bankruptcy. So a bunch of people got it in chat. Let's see if you know this other kooky entrepreneur. We'll try to go through it quickly since we don't have a ton of time left. Also, D-chat, when you said delirium, that was hilarious. So that was a great typo from Siri. So kooky entrepreneurs, this is our last question. So this businessman, programmer, and two-time presidential candidate created the first commercially available antivirus software. He left Belize in 2013 while being investigated for murder and was arrested in Spain for U.S. tax evasion in 2020. He was ultimately found dead in his cell just outside of Barcelona. Does anybody know who this kooky entrepreneur could possibly be?
I have it on the tip of my tongue. He's not the founder of Oracle. He's the founder of this big company as well.
It's maybe like the most notorious antivirus software.
Yeah, yeah, I know it. McAfee.
Is that your guess?
Yeah, I'll go with I forgot his first name, but with McAfee software, or that his last name.
Yep, the documentary is kind of cool. Man, this guy is absolutely out of his mind. It is in fact John McAfee, our second kooky entrepreneur. It looks like everybody got it. John McAfee, also Flower Power, got the previous question. Really good job. Yes, John McAfee, who left Belize after being, people looking at him for murder potentially and looking to get him questioned, went to Spain, got, arrested on charges of U.S. tax evasion, and then unfortunately died in his cell under maybe suspicious circumstances. But yeah, he was a two-time presidential candidate under the Libertarian Party. I learned that while putting this question together. But wild. Yeah, no, he's wild, man. He has a video that I'm not going to say, but if you know the video, you know the video, because this is supposed to be a family-friendly network, so I'm not going to say. But anyway, Luis, I think we're just about out of time. Yep. Is there anything that you want to kind of leave on?
No, just thank you for having me here, Julia. Always excited to be here, and let's see what PCE brings tomorrow.
Yep, we got a whole lot of stuff to look forward to for next week. Interesting, maybe day on the open tomorrow. Certainly keeping a look at Costco. But thank you so much for joining me today. I had an awesome time. Thank you for everybody for joining us over in chat, over on YouTube chat. It was awesome to see everybody here. Thank you for participating in our trivia. We'll catch you next Tuesday. So everybody be careful out there. Good luck trading. Peace.
Oh, yeah, it is Thursday, September 26th, or so they say, a little bit after 5 p.m. Central Time. The best time, you know what that means? It's time for Tasty Live's evening show, a little podcast called The Price of Truth, where we like to explore the incentives that govern our world. Could there be a more important time than tracking and understanding the incentives that are governing our world than right now? You know, whether it's oil prices, whether it's Chinese equities, whether it's central banks, currencies, interest rates, all of this stuff seems to be driven by game theory and the incentives that are all around our world. And I think, we've been, I don't mean to toot our own horn here, but I think we as a collective group, chat included, have been doing a pretty decent job of keeping up with those incentives. Everybody, shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade, desktop and mobile application. If you don't have it, go get it. But if you want to be part of the conversation, as today is a solo show, which means we're going to get this chat hopping soon enough. We're going to get the chat on the screen so you can see your name and all the crazy comments that you guys are going to put into the chat. If you want to be part of it, come on over to YouTube. The evil Google, YouTube, type in Tasty Live, go to the Live tab, and you'll find this thumbnail, this big head on a thumbnail somewhere. Jump on in the chat, start typing in random-ass characters. Tell me if you made money, you lost money, what you're long or short going into tomorrow, how you're thinking about the week that was in risk. We still got a day left. But what a day it was. So come on over, get your name on the screen here. Start typing in random characters. And by the way, everybody that's in the chat, all you guys got to do is keep it active. The more active you keep that chat, the more the Google algorithm can be spoofed into getting us in front of as many people as possible. You know the model of the show. Save the world, one view at a time. Speaking of by, of, and for the people, because that's such a rarity these days, let's say what's up to the people. Shout out to Brian Thornton. Looks like our first person in the chat. Soul Train, what's going on? Adriel, Jay Wright, what's going on? Katan, Meta, V-Dub, A-Red, I think I said your name twice. It means you should probably go buy a lottery ticket. Matthew, Buffalo Bean. What's going on? H. Montero, D-Chat. So many others. I'll try to shout out as many names as I can, but for now, know that I'm thanking you for being here and for the participation and for the random characters that you're throwing in there. Do me a favor as well. Hit the like button on your way in the door. You don't have to take off your shoes, but click that thumbs up button if you'd be so kind. Let's get going here. Let's get going, everybody. It keeps the people going. Another day, another. What do what would you say? Yeah, we tiptoed a bit higher in equity risk, but it was a pretty decent day after advancing towards the open. I think we're up somewhere in the ballpark of 1.5% in the NASDAQ before coming all the way down to unched. I think we ended up anywhere from half a percentage point to around 0.75 percentage point on most of the majors here today. But it was a decent day. It wasn't one of those days where the algos just take the market in one direction. We got some decent two-way price action. That's really all you can hope for most of you degenerates getting in there and trying to slang them intraday. From a trending perspective, and you knew I was going to talk about it. From a trending perspective, even though the majors were only up, maybe 0.5 to 0.75%, I think the Russell might have outperformed that. I'm not quite sure. No, it didn't. Underperformed that. There were some obvious outliers for the marketplace here today, and they just so happen to be a little group of stocks that we've been talking about, right? What are the names, or at least the groups of stocks that we've been talking about as potential rotation candidates? It has been, and it's been consistent, metals, miners, and I say that collectively together, just meaning materials is the way that we refer to that at times, Chinese stocks, nuclear energy stocks, and a handful of others, but those have been our primary themes that we continue to talk about day in and day out. And every once in a while, you get this nice little day of serendipity where all of these things kind of work at once. And today was that day, right? Materials were the outperformer in terms of sector of the 11 sectors. And then, talk about a blow off. I don't know if there's a blow off top necessarily, but you've had just this gap up higher in Chinese stocks. Why did we get that? I don't know if it honestly matters, but I will tell you the narrative behind it. A few days ago, you get the Chinese central bank or monetary policy unleashing, I think, some monetary stimulus into the marketplace. And I think the narrative was, this is good, right? Good start in the right direction. It isn't going to be enough. That was sort of the, there's the bullish case is, hey, this was coming. This was obvious. They've started this. We're now seeing monetary stimulus. The bear case was, this is not enough to sustain. And there isn't enough surety that this will continue. A couple of days later, you get a 24-person group and President Xi Jinping's world get together. Normally, this meeting is not necessarily about the economy. This time it was. And they come out and they say that the current administration, to make sure I'm reading from the right place here, that the official readout was that they would deploy necessary fiscal spending to meet this year's economic growth target of roughly 5%, which had been drawn into question. And that Reuters had reported late Thursday that the Ministry of Finance, the MOF over there, is planning to issue $2 trillion in yuan. That's about $284 billion converted to USD of special sovereign bonds this year. And they will be evenly split between, or the proceeds will be evenly split between stimulating consumption, some stimmies over there, and helping local governments tackle debt problems. So effectively taking on federal debt to help local governments, ease their debt burden. Robbing Peter to pay Paul, you might say. So the point is, you've now got a drumbeat of stimulus over there, monetary and fiscal, sort of like a 1-2 punch. So not only did we get a nice, a few days ago, did we get a nice updraft in our Chinese names that we've been talking about. The names on our radar has been Alibaba, trading at near all-time highs. Baidu, which has had a nice catch-up off the lows, something like 50%, if I'm not mistaken. Most of this stuff is up 50% off the lows. But it's nowhere near its highs, Baidu. I'll throw that up on the screen for you guys to take a gander at as well. To me, this is one of those that I don't necessarily understand. Oh, we did get a nice catch up. Good Lord. That was that escalated quickly. So this got much higher than I thought. Let me go a year out so you can see it though in context. So this is a year price chart. Look at the difference between Alibaba, the sort of Amazon of China, and Baidu, which is, I don't know, maybe the Google of China. Big difference here, but you're starting to see that catch-up trade play itself through. Some would argue that this is sort of a quasi-AI play of China, though much further behind some of the plays in the United States. But it's not just these big hitters, right? Today, JD.com was a monster day. Li Auto was a monster day. XPEV or XPeng is really the underlying EV name. I could go on and on. WB, which is Weibo, Melco Crown, which isn't necessarily a Chinese stock. Melco Crown is a resort out in Macau. So as long as there's, as long as there isn't any political persecution, which happened, I think, through in the 2015s, anyone that was going out and gambling in Macau was getting picked up and thrown in jail. As long as nothing like that is happening, and there is money flowing, people are a little bit more confident about the economy. Gaming typically does well out there in Macau. So this had a nice little pickup and recovery. Neo, I could go down the line. You find a name, chances are you see a chart that looks something like this. And I think the logical question is, well, Vic, is this new longs? Is this a belief in the upside, or is this short covering? If it's short covering, because you tend to see this with these Chinese stocks, right? You'll get a headline or a 2-headline rally, and these things just go insane to the upside. If you've been trading Chinese stocks, or if you're new to them, you need to know that this is par for the course. Maybe not to this extent, maybe not 50% off the lows in a month and a half or something like that. Maybe that's unique, but I think a double-digit percentage, somewhere between 10 to 20% rally in these things, it can and does happen off of fairly light headlines. And a lot of the times that's short covering, and a lot of the times it's not. It doesn't. These types of rallies don't necessarily have lasting, staying power. And it doesn't take a gene. You just look at one of these charts. Let's go over a 5-year period, and you can sort of see exactly what I'm saying. Let me use something a little bit bigger, a little bit more liquid. You see these like massive, nasty rips, but all along making lower lows. You've seen a bit of a basing pattern in a lot of these underlying stocks. So you probably had maybe 3 or 4 months to get long some of this stuff where it didn't go anywhere. I would liken it almost to what like Boeing looks like now. It's not going anywhere. Maybe Albemarle might be another good example of something that just leaked lower. I'm on a weekly basis. Let me go daily. Just leaked lower, and it's just not. You're not getting hurt by owning this necessarily lately, but it's not going anywhere. And I think a lot of these Chinese stocks were just that. There was no catalyst to a narrative. It was not. These stocks weren't leaking lower, but they lacked an upside catalyst. And we finally got one. I think the question becomes, this show, we don't like to be glorified meteorologists, right? Where we're just explaining the weather by looking at a chart and saying, this is what happened yesterday, everybody. Okay, goodbye. I don't really think that tends to be value add. So this is really catching everybody up to what we've been saying on a day-to-day basis. And then the question becomes, okay, what do you do from here? I don't know the answer for you, right? I can just tell you the answer for me. So the answer for me is the way I've been participating on a lot of these underlyings is I've been going net long the stock. I don't always do that, but I don't, in these Chinese underlyings, I had no idea when the catalyst would come, and I didn't necessarily want to be bleeding theta, just waiting for a day that may or may not come. So the way I chose to play a lot of these things was actually net underlying stock ownership. I think I said that in the past. And so I just built a position in stocks. So now that we've had this nasty little sort of hockey stick move, the question is, well, what do you do? I've chosen on a lot of these underlyings, if not all of them, to collar existing risk. So I'm selling mostly November. I think most of this stuff was all in October, some of it, but mostly November, depending on earnings for some of these underlyings, to collar. So sell upside calls and pay for some downside put protection, and then add a little bit more stock exposure. So the collar, given that I'm short a call and I'm long puts, that's going to give me negative delta. So it's going to minimize my existing delta exposure. And then I picked up a little bit more long stock exposure with some of these underlying. So I've net decreased my delta, but I still have some exposure here. So that's how I've chosen to play this. For anybody out there, if you don't have exposure, you can convert what I have. What I have, basically, when you're long stock, you sell an upside call and you buy a downside put, you have a synthetic vertical spread. So you could look at it like if you had no net exposure, the position I have on today is basically a cheap vertical spread, probably at the money. And if you get additional upside, you participate. If these things off this dumb hockey stick move to the upside choose to revert a bit, which would not surprise me at all, that some people that have been buying up these cheap stocks, if you're buying FXI in the low 20s and you just got a $10 move, what are the odds some people are going to lay into this a little bit? Those are pretty decent odds, right? So if you've got a bit of the FOMO and you want to participate, I suppose the way that I would do it is at the money vertical spreads to really minimize the pain of a downside move. But I would probably, by being a little bit patient and disciplined, who knows? I would imagine there's going to be a better entry price here somewhere soon. But I think David Tepper, famed investor here, had some very bullish comments this morning on CNBC, I believe it was. So if you didn't see that interview, I would highly recommend going and taking a look at it if you need a little bit more bullish confirmation bias. But charts, tell me, what are you guys thinking? What are you guys doing? C-Web finally paid off. What are you guys doing with the Chinese stocks? One, are you in them? Did you eat on that big move today? And if so, what are you guys doing after this massive move in these underlyings in just a couple of days? You holding the bag here? Are you protecting profits in any way? You doubling down because it's working for you? I'm curious how you guys navigate this stuff, and I'm sure out there's some couple of people sort of wondering what to do themselves. Let's see what you guys are saying. Short 192,000 notional value of Alibaba at the close. What does that mean? You just bought puts and you're trying to be fancy with a notional value? I know what you did there, Prince Caspian. Let's see here. I bought Baba and Billy as puts as well. Oh, you guys are getting bearish. I mean, I don't blame you. I just think here's the reason why I'm careful about the bearish play. Okay? And I said this with Tom earlier today. If you look at this, is why I think it's important to have a process that includes multiple time frames. I'm going to show you exactly why. Okay, let's just say you're somebody who works off of a 1-year daily chart. Okay, you're going to look at Alibaba on a 1-year daily chart, and you're going to see this nasty, this move to the upside, and you're going to go, oh, this is overbought. I'm sure every RSI indicator you could throw on here, or stochastic or whatever, is probably showing some overbought territory, some reading above 70 or whatever. But the point is, if we take a slightly different view here, last 5 years weekly, you can see that it tells a very different story. So again, it depends on your time frame, right? You're trading for the next 45-day cycle, or is it something else? For me, picking up long shares was a little bit different than trading for the 45-day cycle, which is why I'm choosing to sort of collar it off. And if we get some weakness, I'll eat it, take the hedges off, and then go from there. Because I think over a longer period of time, this could be really interesting. I could be totally wrong, right? We could get GDP, or excuse me, not GDP. We could start to get some weak global figures in here pretty soon, and that'll change the whole complexion of the marketplace, right? But, I'm greedy. So that's why I collared it and giving myself a little bit more upside. What else are you guys saying? Let's see, PDD. I haven't been in Pinduoduo. PDD, I missed that one. Prince Caspian saying the news is overhyped and the market will realize that it's an insignificant bailout relative to the property sector collapse. I kind of agree. The numbers that we're talking about here, in terms of the monetary and fiscal support, I mean, they're pennies compared to like the longer term need. So I do think Prince Caspian has a very, very good point there. It's not like they just came out with an $8 trillion COVID stimulus package to save their property sector. But I think it's the indication that they're willing to be stimulative. And how long they're going to string the market along with these types of announcements, that becomes the question. But I do agree with you, Prince Caspian. These two announcements in and of themselves is not enough to save them from their own problems. Love that Blob says, Victor, me too, bag holding Baidu for 3 years. Ooh. Where were we 3 years ago? I'm guessing not at great prices relative to where we are now. It depends. It depends on 3 years ago if that includes this little guy over here. Tepper went everything on China. That's right, Sleepy Mocha. So the reason I think this is getting a lot of play is because David Tepper doesn't necessarily have these like big proclamations very often, and I think his last one worked out fairly well. I think he even mentioned playing Las Vegas Sands and Wynn, which had monster rallies today, as sort of proxies. Why is that? Well, because, if you remember Steve Wynn back in like 2007, I want to say, he took their casino business a completely different direction. I think, if I'm not mistaken, one of his famous quotes is Asia is the surest bet. The surest bet he can find, something along those lines. So they've had a casino expansion throughout Asia. Las Vegas Sands, for example, Marina Bay Sands in Singapore pulls down just stupid amount of money. The two casinos in Singapore, I think, pulls down more from gaming than the entire Las Vegas Strip. So anyways, if you were curious why these stocks had just as the casino stocks had a massive rally, some of that has to do with a proxy China play. Some of it could have to do with Tepper's comments this morning. D-Chat saying Tepper was great. I'm playing it through the commodities futures. Another area is copper, which is up to 464. Remember, we were just a couple of weeks ago. I remember on a Thursday or Friday, we were watching the copper market get absolutely drilled back down towards 4. And here we are just a couple of weeks later at 460. So you've got two things working for copper, right? There's the AI read-through, and this is on two things working from a narrative perspective, if you think it matters at all, right? But there's the AI read-through that you're going to need copper for these to fuel the AI revolution, and you're going to need copper. China consumes 70% of the world's copper. Always. So they're always in the mix. So you've got seemingly two parts of that narrative all working together. I don't know that I'd be getting bulled up here on copper, if you're not in the trade by now, it's kind of hard after a 60-cent move to the upside. I do have some Freeport McMoran. We've talked about that. So FCX is the equity play. Why is this the equity play for me personally? You can do this in other ways, but finding copper exposure in the equity market tends to be a little bit more, it tends to be difficult, finding something liquid anyway. And Freeport gets 70% of their revenue from copper. So it tends to be highly correlated, decently correlated to copper moves. And you can see it reflected here up towards 52. I didn't collar that one today. I probably should as well. Let's see what else you guys are saying here. John Stein. I do not trust the Chinese stocks. I'd rather just play more semiconductors and chips. That's a really interesting comment, John. I don't know that I trust them either, right? I don't know that I trust the accounting and all of that. I don't know that we've hammered out all of those issues. And I also don't know that you can always trust the risk in a lot of these names is government intervention, right? There's a heightened risk of government intervention, and for that reason, they trade at a discount relative to their U.S. counterparts. So the question is, what do you feel more comfortable doing? Do you want to play their more expensive, higher valued U.S. alternatives, where the U.S. market's trading at a 22 forward multiple, or do you want to trade some of these names trading in single-digit multiples or low double-digit multiples? And so that's the choice that you make. If we're taking on or assuming some of that extra risk of government intervention, of unknown accounting principles, the trade-off for that is a lower multiple. And so you just have to make that decision. And I don't know that I can fault you for feeling that way, to be quite honest. Took profits in KWeb 2 days ago. I don't know why I never bring this one up. This was probably something I should have had exposure in, So KWeb is an ETF that tracks the internet sector or companies that are in the internet sector in China. And this one has some juice to it. So it's got some nice beta behind it. So it's actually a really good underlying. I don't say good. It's an interesting underlying given my style and approach. And I don't know why I didn't mess with this one. I should have. January Baba calls and rolled them up. Very rare Baba win. Nicely done, Sleepy Mocha. My EEM8. Nicely done, A-Retta. Rolled SEP calls into OCK 21 DTE. October 15-cent calls were over $1.50 today. That's what I'm talking about, since it went from 44 to 46 so quick. Nicely done. Everybody, give A-Retta some love in the chat here. Copper on fire this week, too hot to hold. And last one from Stephen Crane. My Russian ETF money is still frozen. That's the other risk, right? For what was the underlying? It was RSX, right? Wasn't that the ticker? Here's your other risk. Your other risk in some of these underlying names, right? You've got delisting risk. So a lot of these, something to remember about these underlying stocks is they're listed on multiple exchanges in multiple geographic locations. Some listed in the U.S. that are ADRs to China A shares, maybe, or mostly like Hong Kong. And the U.S. shares can trade at a premium or discount relative to, let's say, the Hong Kong shares. And mostly it's a discount. And whenever that discount gets wide enough, sometimes you get the CEOs complaining and threatening to delist. It's sort of like a little tactic that they use to create some sort of short squeeze on the U.S. side sometimes. But, there is always a risk of delisting U.S. markets or just something like this in FXI where they just freeze trading depending on what the relationship is between the U.S. and China. But God help us if that happens. We might have bigger issues than FXI being frozen out. So I think that's going to do it for us on that topic. But I just think the interesting thing here, leading off with the discussion all around these Chinese stocks, I think my personal opinion, I have never been one if you're not in these, it's real hard to make money trying to come in at this part of the trade. It's real hard to try to fight the FOMO, but it's like, in this show, at some point in time, we stopped talking about NVIDIA, not because it might not be a great investment for the long term, but on a 45-day cycle, our risk to reward of taking an incremental dollar and putting it in NVIDIA started to not look so great. So that's why we came to the Chinese stocks. That's why we went to material stocks and Freeport-McMoRan and the uranium stocks. That's why we went to these underlyings, because they were cheaper alternatives where we didn't have to fight the FOMO, that we could look at more value-oriented plays that might benefit on second or third order effects on what everybody else was trading and chasing after. So just, your money, your dime, your dance floor. The whole reason we were looking at some of this stuff is so we could avoid the FOMO. And so if you find yourself in that position, itching to pull the trigger, just a lesson that somebody's got, I've had to pay for several times. So anyways, Jack Murphy Live says, buy high, sell higher. That is the name of the game sometimes, right? If a market over time, we continue to see new highs, that's the point. But I don't know. I like to buy the dogs and wait for everybody to come to us. That's the name of the game to me. All right, let's keep going. Vol compressed a bit today, down to 15 and change in cash, but VIX future, it's just being stubborn, not moving from 18 and change. So we're still elevated in terms of the forward term structure, which should surprise no one. I think what's very unlikely is if you've been watching the VIX term structure throughout the year, there's been this kink in October term structure in futures. And the reason for that is the October futures expire a couple of days after the election. So the October futures are the VIX futures that are going to cover volatility term structure until after the election, which somebody on Twitter helped me out with. And that's been elevated literally all year long. So I don't know, and why is that elevated? Of course, because you've got a bunch of people that sort of looked out on the calendar and said, well, I don't know about this whole election. Let's buy some premium here. And I don't know that we're necessarily going to see people ditch those hedges unless there's some clear reason to do so. With a 50-50 race as we move into October, are we likely to see some October surprises come out of both sides? Probably. Are we likely to see the election swing to one definitive direction or the other? I don't know that that's going to be the case. And if that's not the case, then we're likely to see that kink, that high end of that term structure, remain elevated until we get some sense of clarity, which is probably on the other side of November 5th. So that's my take on why we are I think we are unlikely to see meaningful mean reversion off of an 18 VIX future. The VIX cash can do what it wants to do, but I think the VIX future, will remain elevated until after the election. Tell me if you guys agree with that in any way, shape, or form, but I think that's likely the case. Let's see here. Let's keep rolling. You kept your composure, took a shot at you on your views of the markets today by telling you to talk more politics, not markets. That's just a friendly jab. It's like anyone that's played sports before, you talk the most smack to the guys that you really get along with. And so that's all I see that as. And so, every once in a while, people aren't they don't know the relationship between two individuals. And I know it can seem adversarial at times, but it's not. I have a ton of respect, and I think he does too, but that's his style. And we talk crap to each other to have a little bit of fun, because this is, this game's only fun if you make it fun, right? It can be agony every day if you want it to be agony, but I don't think that's worth it. So let's talk bonds for a second. We've been talking here about I don't know. We were screaming it from the mountaintops to anyone who would listen, but nobody listens to us, right? We're just in our own world over here in our little corner of the internet, not caring about censorship or partisanship or what the consensus narrative is. We were over here saying, I don't really think bonds are going to do what people think they're going to do. We're already down to like 3 3/4 in the 10-year. Why would it keep going down if interest rates, if the short end of the curve is going down to 3%, and if we do have some soft landing, or we're not sure about where the economy would be, because a normal spread would be like 100 to 150 basis points. So that means it's not crazy to think about the 10-year being at 4.25 or 4.5. And if 3.75 is right, is that signaling a bit of fear about the growth in the economy? And if so, does that mean stocks are incorrectly priced? I don't want to say incorrect because everyone's going to be like, oh, the market's always right. I gotcha. But at certain times, it seemed like it didn't make sense. So anyways, we had positioned for the potential post-cut that the long end of the curve would that we would see interest rates rise at the long end of the curve. And sometimes it's better to be lucky than good. And we have seen the long end of the curve rise just a bit. We're at nearly 128. Let's call it 127.5 in the long end of the curve in bonds. We got down to 124 today. And I think, we had said on this show, once we get to the 125 area, it'll be, it'll be interesting to see if you continue to see downward pressure in bonds once we get to like 125. And we traded through that yesterday down into the 124 handle, but it looks like today they found a bit of footing around 124, which shouldn't necessarily be surprising here. If they drift lower to 123, maybe 122, that would be like an extreme case. But, I think today was an interesting day to take some short deltas off. I did that yesterday a bit, and I took some more off today. Both long puts and short calls. I think I was short the 126, 128 call spreads. And I took those off along with long puts. So I think I've got some like 120, 128 out of the money put spreads, something like that I kept on just in case this thing goes crazy. But other than that, I'm flat ZBs and ZN here. Just letting you guys know, because I do think we've, being short here, what's the upside? Maybe we get down to 122 or something like that. But like for 2 points, is it worth keeping our short on that we made a pretty decent amount of money? And for me, the answer is no. For you, I don't know what that answer would be. So I don't know what to do here or how to think about the long end of the curve. To me, I won't be trading the long end of the curve, but I'll be listening, right? The more stubborn the long end of the curve becomes, I think, the more potential risk there is in the tech trade. But I don't know how much. Yeah, today they didn't look great for most of today, but I don't know. Around 124, I don't know how much damage we expect them to do to tech at these levels or at these interest rates. This seems about right. I think we continue to drift higher in the long end of the curve, but we don't go straight there. I don't think there's enough juice left in the squeeze, so I'm going to leave the long end of the curve alone for now. What are you guys doing? Are you guys doing anything? Long end of the curve, I think the 210s were out to like 20 basis points or something like that. That's probably good enough for now. Let's see. Sterling says, historically, the 10s, 2s uninverting and accelerating beyond the 20 basis point range equities start to suffer. Maybe this time is different. I'm with you, Sterling. My thing is I just don't want to be sure. It's like, I don't know that the risk reward of U.S. equities looks super attractive, but I just don't want to be short. And I don't know what that is. It's like everybody's printing money right now. And we could continue to see nominal price highs and not go anywhere in real terms if we had a real inflation metric. And so that's why I'm sort of deathly scared, if I'm being honest, to be short anything in a market. where we've got this populist printing impulse. It seems like we're in an easing cycle on the monetary side and fiscal. There's no sign of stopping. So I think the risk reward on shorting for me, I don't love. So I have increased cash levels and we get cheaper at U.S. equity prices. I'll be there to buy. For now, I like the risk reward of things outside the U.S. right now. I think that Tina mindset that most of the world has had, I think there's a very real potential that there's a bit of a shift there. And I don't know how long-term that is, but I think in this little pocket that I like the risk to reward of some equities outside of the U.S. versus inside the U.S. Let's see here. Note, can you offer up year-to-date gains? Are you asking me what I'm up for the year? I think I'm up. I'd have to do the math, but I think I'm up like it's under the S&P, given what happened 2 weeks ago. So I think it's maybe like 16% for the year. But you got to understand, I've been running 60%. I'm at like 60 something percent cash levels right now. Earlier in the year, it was 35%. So I haven't been fully invested, and I've just been trying to keep up with the S&P 500. So on a risk-adjusted basis, I've done well. On an absolute basis, I'm a little bit underperforming, but I'm over-concentrated in an area that can catch up quick. To answer your question, I have no issues letting you guys know that information. I don't sell newsletters. I don't care. We'll keep cruising here outside of the long end of the curve. Oh, so I don't know why, but I can't get off this kick of wanting to fade the home builders. I cannot get off this kick that I want to fade home builders. And this is, again, I said this with the long end of the curve is probably going to get me killed. And we just got lucky it didn't. But now there's another one that I just cannot stop wanting to bet against, and this one's probably going to get me hurt as well. But we are seeing a little rollover in U.S. home construction. And the other thing here, why I think this is interesting, is because a lot of these home builder ETFs, they're not just the home builders. So a lot of the home builder ETFs like ITB or XHB, they have in their top 5 holdings, a lot of them have Home Depot and Lowe's. And I'll speak to this really quickly. I talked to Tom about this earlier today. You can go with the thesis, or you can outright reject it. You can call it crazy. You can do whatever, man. But I suppose my point of view was you have what is currently, I think, the low of mortgage rates for at least the year, and I'm not sure how long going back, but we're like 6%, something like this, which is low in mortgage rates. And with the stubborn long end of the curve, I'm not sure how low that is actually going to go. So in other words, if the whole premise behind the home builder rally was that we're going to get lower rates and that will unlock the potential for buyers to buy new homes, which will accelerate the home builders, which have already gone ape, you know what, in the last 12 to 16 months. Look at the chart of any home builder. It's crazy. PHM. Yeah. Look at the chart of any home builder. It's crazy. Not all home builders are created equal, though. Some of these are luxury home builders. Some of these are lower end starter homes. So I think it matters where you're betting against here. But I would rather leave the luxury home builders alone. But I do think, anyways, here's where I'm going. That because the top 5 holdings in a lot of these home builders are either home builders, which I think may not get the relief that many are expecting in mortgage rates in the short term, and they've already gone crazy to the upside. So the question becomes all right, what's in this price? I get that we're cutting now, but we were supposed to be cutting 6 or 7 times at the beginning of this year, which is part of the reason why all of these home builders went nuts to the upside, because they were pricing that potential expectation. It just hasn't happened. So if you unlock the supply from existing homes, what does that mean Does that mean that new homes don't have the same type of potential pricing power that the market thought they did? So that's one on the home builders. The second is Home Depot and Lowe's. The beginning of June is the start of the hurricane season, and there was an expectation this would be an active hurricane season or above normal hurricane season. So Hurricane Helene is the 8th named storm in the Atlantic hurricane season. The estimate was for a total of like 4 to 7 or 8 to 13 hurricanes, with 4 to 7 of them being major hurricanes. So we're in the range of what the market was expecting. The total potential damage estimates right now for Helene, I don't think it's made landfall yet, but expect it to tonight. Shout out to all of you who are in Florida, have family members. Thoughts go out to you. Hope you're safe, and I hope that damage is minimal. But the expected damage is somewhere between $3 and $6 billion, as long as it doesn't take an unexpected turn east towards Tampa. If it heads towards Tampa, the expected damage is like $10 billion. But the expected course may be somewhere $3 to $6 billion, and that's if it gets up to the Cat 3 or Cat 4 expectations, which I think right now it's 1 to 2. My point is, the question I always ask is, what is in the price? And I think we're going to likely start to see some headlines over the next couple of days after the hurricane makes landfall, after we start to see damage, if in fact that's the case. We hope it's minimal. But if that's